There it is.
All right. So let's make sure that everything has the stuff. It did not.
Again?
Yeah, YouTube doesn't seem to pick it up all the time.
That's exciting.
So I'll go copy it in. This is month 51, I believe.
Yeah. Not buying anything yet.
It did not.
Checking the audio.
It's 51, I believe.
Yeah. Why does it do that? Why is my audio so quiet? I think I'm too conservative on gain. For whatever reason, I'm terrified of hitting past that. Like, overdriving my voice. I went from 55 decibels of gain, I'm now up to 73. See if that. Alright, let's see if this makes it. Does this sound pretty? Do I sound pretty? Decibels of gain, I'm now up to 73.
Thumbnail. Need the thumbnail. It's not here. This is a different.
Alright, let's see if this makes it. Does this sound pretty? Do I sound pretty? No, I need to turn it up a little bit more. Still. Oh, that's as loud as it goes. Okay, well, 70, 75. We're all the way up, Brian.
I don't think you need to be all the way up.
Well, I don't need the mic, so if it distorts it, I'll just hit the slider. I can't see YouTube chat, so I will rely on you.
Well, soon. Next week, we're going to get this set up so you can.
Barry back, filling up my tea again. Still with me?
Yep.
Teams upped their bitrate last month. So you should sound clearer and look nicer. So Rob's doing his CEUs for the medical renewal. It's fascinating the stories that he has. There's a lot of opportunity in that space, but there's a part of me that when he's talking sees it and I think, oh, that's great. But then I realize like I'm already working 50, 60 hours a week. So the question is how? how are we going to do that? And I don't want to abandon all the customers and things that we're doing now. Like we've got good customers. I want to keep them. I want to make sure that they know that they're getting the best deal they can. Because I like helping people. And then I feel like this someday, eventually, hopefully, Dividend Dudes, passive income channel, whatever, this will help many people, not just a few people, but this will help a lot of people. Then maybe I only need to work 25, 30 hours a week and actually take more than just one vacation every 5 years. Oh, my son had a hearing test. He failed it.
Oh, no.
Yeah, Abby did too. She had to have a surgery, so they've got a specialist that he's getting referred to. It makes sense because we would have to like, Tommy, like yell at him just to get him to pay attention. Even this morning, we're eating breakfast and Heather was trying to tell him to do something, and he's like, "Oh, I didn't hear you." Okay, it explains a lot. Like, is he just being a jerk? And no, he's not. He can't hear us. They say it's very common, and they say that he'll probably grow out of it, but they just want to make sure there's nothing there that, like, because the ear grows strangely, I guess, for kids. It's very different for each kid. They just want to make sure there's nothing wrong there. He heard the loud test, so when they raised the volume, he was able to hear it, but the quiet stuff, he couldn't hear anything. It's like, I didn't think my stereo was that loud. I didn't think the piano was that loud either, but maybe. It is a grand piano in a relatively small place, but... I also get my allergy factory this week. The guinea pig shows up this week.
Fun.
For the kids, yeah. Not for me. I'm a big softie when it comes to pets, though. So Aaron told me he's going to help me not get a dog. I don't want to walk a dog at 5 a.m. in the winter. I'll put it in the tractor and I'll like let it walk next to the tractor in the snow. I guess big poodles, regular poodles, they don't have fur. It's more like hair, so you don't get as many allergies with them. But also they're a lot different than golden retrievers. Personality-wise, they're smart, so they need stimulation. If they're not, they become kind of jerks, like border collies. But I don't know. I don't want that. I don't want that right now. I've got too much crap going on.
Short-haired dogs are definitely better for fur everywhere, but I still kind of prefer the nice coat to pet, you know?
1 minute. I enjoy this. It'd be nice if it actually paid us, but I enjoy it.
Good.
I'd enjoy it a lot more if we actually got paid, because then I'd feel better about, like, hey,
I know everything about you is about money. You're so greedy.
Oh yeah, sure, that's totally it. It's got nothing to do with keeping people employed.
It's all about the Benjamins.
Yeah.
Oh.
If it was about the money, I would have quit this 2 years ago.
There's blend modes and melt now.
What are we starting with? The Thinkorswim? We start with our regular portfolio thing.
Well, we always start with our 20%, right? Might as well start with that.
Yeah, okay, I'll do that. I gotta lower this camera. I'll get the unflattering view that Carrie said I had. You look ugly. Yeah, well, I'm not 15 anymore, so. Deal with it.
No, she didn't say I looked ugly. It was you.
Yeah, she was talking about me, not you. Thanks, Brian. That's it. Now we're live.
We are live. It is another week. It is another time for us to show you how much we do good for you. Our 20%. Let's do it.
Brian was, he depressed me a little bit. He says I'm all about the money, and yet we get paid $5 a month.
You're always bitching about the money, man.
Well, because we're not getting paid. That's why. Well, we're getting paid here. Check this out. I keep expecting this number to go down, but it doesn't. It keeps going up, but that worries me. So Brian wants to start. We have a lot of weird things to talk about, but I also want to show people some stuff today about Thinkorswim and day trading, because I've had a few questions about it. One of the persons that was talking to me, he was like, well, how do I know you even know what you're talking about? I started talking to him about it. He goes, wow, you really do know this stuff. I says, yeah, but you don't show us that side of it. It's like, well, that's not how we invest. So I think I'll show you guys. I think we'll show you some of that today. We always start. Brian, you want to go through this? You want me to go through this?
Well, you got control, so you...
No, you could point. You could point to the screen, and I'll move the mouse. That way, you can get mad at me. So we have right now we're up to $164,000. I would say this is about $155,000 portfolio. At some point, we'll start publishing $122,000 in there because I think the market's kind of overvalued right now. They call it the everything bubble. It used to be the asset bubble. Now it's the everything bubble. After that, it'll be the everything plus the plus minus bubble. And then it'll be Q, and then the ampersand, and whatever that whole movement has. But no, we got portfolio performance over the past, I don't know, 2 years, 2.5 years, something like that.
Yeah.
We have had a cumulative annualized return of about 19.2%. That excludes dividend checks. So if you throw in our dividend yield, it's about 25-ish%. I get nervous when it gets this high. So every year we've made about 20%, just over that. Every time I get to 20% personally over the past 20 years, something happens. Something
bad is going to happen. There's going to be some sort of pandemic, or Iran's going to explode, or something's going to happen.
Something goes on. So
our electrical grid's going to fail completely, or something's going to happen.
It's a good performance because there's more to it than just this annualized gain. That's the percentage of the principal of the growth. Doesn't talk about the profit sharing or dividend checks. What we have here is how much we've actually made from buying and selling stocks since 2023. And we have made $55,000 from buying and selling stocks outside of our own contributions. So of the $164,000, at least a third of that is just profit. So
yeah, that's almost the average salary for somebody in Michigan.
That's sad.
For a year, yeah.
That's true. So if you're thinking like, well, I don't know if these guys know what they're doing. We've done this 4 years in a row. You can't fake it 4 years in a row. So here you go. And what we care about most, so I'm going to look at our positions here real quick, just so you can see what we have. This is not day trading. This is not get rich quick. This is not something you're going to jump in and be a millionaire in 3 hours. It's going to take time because you are giving companies loans and they got to pay you back. Yes, I know that's not how the stock market works, but this is what we're doing. We are essentially buying companies, giving them loans through buying their stock. This is how I see it. And they will pay us back from the profits that they make on selling their products. That's how we believe that this should work. So most of the companies we have in our portfolio are relatively essential companies. If you look at some of our worst performers, those are the ones that we're actually looking at adding shares to, because quite frankly, if you're Comcast, they're not going anywhere. Kimberly Clark, if you don't buy toilet paper, what is wrong with you? Either you live in Japan or you've got a really, really fancy bidet. And Campbell's soup, I mean, let's get real. That's soup and goldfish.
Yep. Staple foods.
They're not going anywhere. Beyond that, like we've got a couple risky stocks. One of them is Rumble. We like Rumble. Keep trying to add to them every month. But most of the other companies in this list, like IBM.
And not our worst performer.
No, not anymore. Which makes me a little nervous. Maybe we should add more to them this month. But most of these companies like ADP, Payroll Processing, American States of Water, it's Utility, Coca-Cola, like these are all well-known, established companies with products that are produced that people have to have. Like 3M makes adhesives and roofing materials. If you don't have a roof over your head, you probably live in California. No, like you're in trouble. So we don't really care about any of these gains on the right. Yes, I know these are big numbers. They look awesome. But the reason why we don't care is because that can fluctuate a lot. When it goes down, that's where we see opportunity. When it goes up, then we think there's some risk there. What we care about is this. This is the investment income, because we talked the whole time about getting dividend checks from, or profit sharing from the people that make these products. We want a small percentage, not a big percentage. We want to make sure that dividend is a healthy dividend, not one where they're like, hey, we sold a building and now we're paying you from the proceeds of the sale of the building. If it's an REIT or real estate, a little different. But most of the time, I would rather make a penny off of somebody who is selling like a Campbell's soup. Every time they sell a can of soup, a penny off of that instead of trying to make like a whole dollar off of it. And because that gives the company room to grow. It gives the ability for the dividend to grow, and it makes sure that everybody wins. It's not like you're taking something from somebody. So in this case, we are getting about $382 roughly in dividend checks. Now it's a pay raise. This is the 5th stream in a row that we've had a pay raise, I think. Yep. From dividends. We've like every single stream now we're getting something. Now that could change. That's why I get nervous when I show people 20% per year. It's like, man, that's really good.
And let's be fair. Let's be fair, because the pay raise could be like 20 cents. So it's still a pay raise.
Still a pay raise.
It's not that much.
Yeah, I don't know. Can you buy anything for 20 cents now?
I think so.
Is there anything out there at 20 cents? But no, this is $382 a month. That's almost enough for a legitimate brand new car payment. Not quite. They keep the car prices keep going up. Yep. So this is
That's
what
a moving
we care
target
about
these days.
This is what we care about. So this September next month we're getting about $731 in dividends. Next month it's $338. Next month it's $155. Next month it's $575. So it averages to about $382. The reason why we care about this number is when the stock market crashes, it's usually about once every 8 to 12 years. So you could say every 10 years. It goes down by about 40%. That's a big dip. And we actually covered this a few weeks ago. If you go look at that stream, we show it where like Citibank, AT&T, Fastenal, some of the others, like what happens to the utilitarian companies when the market crashes? They don't go down as much. What happens to the more risky plays or the ones that are more capital centric? They drop a lot. So if you have a $100,000 portfolio and it drops by 40%, you've got a $60,000 portfolio. Don't sell it. We see that as an opportunity. If you buy companies that are durable, that produce products that people that have to have, you're still going to get your dividend check. We showcased that a few weeks ago. And that's going to happen during the recession, or during a dip, or during like whatever the crash is. So you're still going to get this income. Now, if you are struggling financially in that scenario, this will pay your car bill. Like this will pay a utility bill. This will pay something. So it started 4 years ago at a big fat zero. We're up to this in 4 years. Can't wait to show you guys what happens in 4 years, but I'm not in a hurry to get to the 4-year mark.
And you always want to keep the monthly average in mind, because if you do it month to month, I'm sure you make 701, but by the time you get to November, you've spent all that money, you're going to be not being able to pay bills because you've spent all the money that you had. So You take the monthly average, use that as your monthly spend. So when November does hit, February hits, May hits, you still have money left over to pay those bills.
Oh, hey, Matt, I saw the 3M is a big supplier of Velcro hook and loop products. Yes, they are. Yes, they
And
are.
Spartacus has joined us. He sold some RHI to buy more PFE.
Oh, you sold Robert Half. That's Robert Half, I think.
Mm-hmm.
I think ARHI is Robert
To
Half.
buy some more Pfizer.
Yeah, it's funny. When I was starting out in IT, I was in the conversation with Robert Half almost weekly.
Yep. Big recruiters over in Grand Rapids.
Pfizer is an interesting conversation. They're potentially a value mismatch. They might have some of it priced in. They're not going to be bad long term, but I like where they're at right now. So we've got $8,000 of like that we've thrown into them, and that's down by 4.5%. Their dividend yield is pretty good. It's at 6%. In fact, let's go take a peek at them real quick. So here we have Pfizer. I want to just see where their dividend yield and their payout is. Now, if you're not familiar, the payout ratio is the percentage of their earnings and cash flow that they are able to pay their dividend with. Now, right now, that doesn't look good. Their coverage ratio also doesn't look good. So how long over the trailing 12 months, so TTM means trailing 12 months, how much of that of their earnings and their cash can they pay in their dividend? And right now it's only 3/4. So they can go 3/4 of a year and their dividend runs out. Now, granted, this is Pfizer. They're not exactly a small company. What I would say that this indicates is their payout is unusually high. They should be somewhere around 4%, and right now they're saying 6.5%. I wouldn't count on the 6.5%. I would count on about 4.5%. So if you take that and you move it down another 30% or whatever, these numbers start looking much better. The payout looks better. The coverage ratio looks better. But again, this is a down time for Pfizer, and that's why we're interested in them. So not a bad play. Especially not over the next few years. As far as what else did he say? He sold RHI,
He sold
right?
Robert Half, yeah.
That's an interesting one. That's it. So Market Edge says that they like them, which probably means avoid them.
There's a lot of volume. It doesn't look like there's a lot of volume here, but
they are at their high. Now, I wonder. No, they're not out of their trough yet, so you might. What was their high? So 3 years ago, their high was almost $90 a share. Let's look at 5 years out. Okay. So Spartacus, my opinion, and fact check me, please. Get your financial guys in on this. I don't think Robert Half is out of their rut. And that's just kind of like Pfizer. So they're both the same narrative. If the market crashes, I would be real curious to see what these staffing companies end up doing. In fact, let's look at their max chart. Spartacus, man, why didn't you sell in 2020? Come on, man, get with it. What is 2022?
You should have predicted that, man.
You should have seen it, like crystal ball that, man. But no, they're actually a good recovery now. But look at how violent this stock is. Good grief. Let's compare this to Pfizer real quick. And I want to show people some interesting things on Thinkorswim, so we'll get to that. Man, Pfizer looks like an old guy that can't get Viagra. Just flat, even though they sell it. Do they sell it? I don't know who sells that.
What?
Nothing. It's a kid show. What am I doing?
I think that's a Pfizer one.
So this is, I mean, there's a dot-com bubble. There's the real estate crash. Here's the COVID thing. You can see it all. They're pretty. So Pfizer, as far as like their historical story that you see in this chart, they, without looking at any of the numbers, we've looked at the numbers like 5 or 6 times on these guys already this year. If I was to assume I didn't know the numbers, which we do, I think they're trading pretty good right now. You're going to go all the way back to 2012. And just real quick, I want to show this. Got to go to their balance sheet, go to their financials, look at their income. This is funny. Ignore the we can't do our taxes. Ignore that. But their total revenue is down, but I think because of the whole pandemic thing, their operating income is on the recovery too. So this is what I would be looking at. Once their settlements and everything go through, I think they're going to start looking a lot better. There are a few patents that Pfizer has that are coming up, like where they're no longer a thing, but their defensive mode is pretty big. So we're planning on this one to be a 5-year play, not a 6 months play. We'll see. It could be wrong.
So Razor Cords joined us. He said, my brother randomly told me to buy DFNS on July 17th because he, quote, knows a guy. I was suspect, so I bought a few at like $8. Sold them all on July 30th for $80. I know nothing about DFNS. Said random risk paid off.
What are you doing? Talking to Nancy Pelosi?
Yes, his brother. His brother's talking to Nancy Pelosi.
So Razor Core, that's a short-term trade. You're going to pay some taxes on that, so calculate that before you spend it.
Yep.
T3 Defense Inc. Oh, aerospace defense. Yeah. We've got an article here about SpaceX and a few things like. So let's take a look. We probably should get into Thinkorswim because that should highlight something about day trading. All right,
Also,
I'm confused.
Spartacus says, ever since you mentioned Campbell Soup, I bought some shares. They're doing very, very well. And I've already received dividends.
You know,
That's great.
I'm great, but I'm also jealous because I bought it and it went down. Like every time I say something, it drops like 10-20%. So anytime I'm like, hey, this is a great company, just wait, I'll buy it and watch me suffer in agonizing, horrific pain and then buy it. And it's like, hey, I did like way better than Tom did.
Yep.
Brian always tells me to wait. I never listen to him. So
I don't think it matters. I don't think it matters if you wait or not because it's just dependent on you. I think the universe revolves around you, like you said.
It does. The whole world. Razor Core, are you sure this is the one? Because I'm not seeing it show up here. I don't see the 8 to 80.
DFNS.
I do see. So wait, let me make sure I got this right. 1 month. Okay, so here we are.
At 5. That's
so this
July,
is 7/23, and then
go to July 7th. July 17th.
July 17th. July 17th. Yeah, here we go.
Yeah.
Oh, and did you buy it before the split? Because if you did,
double your money. Oh, it's a 1 by 125.
Oh, that's not good. That's somebody who works there. So whoever it was that he knew a guy that was going to do a reverse split and they're trying to raise money is what that is. That's a major dilution. And by the way to sell at the high, man.
Yeah.
That's a good timed. I mean, you knew when to get out.
Well, most people see
Good
that
for
and
you.
go, oh, maybe it's going to go up even further. And then, boom, it goes down.
No, you get out. You take your modest growth and get out because the Mr. Market is very unpredictable. There's a lot of smart people that play the market every day, and we'll show you that. You should see that. So just like Intel, we did that with Intel, but it wasn't like 2 weeks. Now, Razor Kerr, can you imagine if it was like $10 million you did that with? It wouldn't work, but because people would notice that the day traders would be like, "Who's this?"
Yeah, but that's day traders. If you just bought shares, I don't think it's the same as if you're buying calls or selling puts or something. You know what I'm saying? Because that gets murdered. But if you're just buying shares, you're just buying shares. Somebody's going to buy it, right?
Well, they would still rake them to the coals.
I don't know. They would have to sell. I'd have to sell a shitload to counteract your buy.
So let's show people that. Do we got any other comments before we show people? Anything
Otherwise, Spartacus says, otherwise I bought Jizz. I don't know why you'd want to buy Jizz, but and they're doing
GIS, right? Gordon
GIS, yeah.
Okay.
They're doing.
You could buy that?
I'm sorry, I went there. Otherwise, I bought GIS, and they've been drag on the portfolio. So General Mills is not doing as well.
The food industry is having a lot of trouble right now with JFK Jr., and they're trying to reposition. The younger generation wants to buy healthy stuff. Imagine that. And so the whole food industry is like trying to slap healthy labels on things that actually aren't healthy.
So Razor Core says, I don't know if it's my connection or yours, but you guys are cutting in and out hard on Rumble.
Are
Matt, can you coordinate that, qualify that?
we? Yeah, Razor
Cooperate
Core,
with
Matt,
that?
can you guys check with us, make sure we're okay?
Yeah.
Razor Core. Wait, that was Razor Core that said that. So Matt and Spartacus, we need to know. Razor Core, what that is Chris found out and Steve found out that you watch us and they're throttling your bandwidth.
You got throttled.
That's what that is.
Throttling your bandwidth.
Before
You're going to switch to your phone.
Before I pull up Thinkorswim, I want to make sure that's. Actually, no, I can pull it up. Let me pull it up. All right, here we go.
Pull it up.
Yeah, all right.
Just keep going until somebody says otherwise.
Switch to Thinkorswim.
I bought Cisco on April of 2025 after you guys mentioned it.
Ooh.
CSCO.
Cisco, that's another long-term one. You're thinking long-term now, Spartacus. Do we
And
sound
Matt
okay?
says no cutting out on my end. So I think it's just Razor Core.
Yeah, we blame you, Razor Core. You're the IT guy. Figure it out.
You're the problem. It's you, Taylor Swift.
So I have a what stock is this? SH. That's not the one I want to look at. This is called Thinkorswim. This is a platform where you can look at like the stocks in real time. You can see day trading. AAPL. Where's Apple? There we go. Apple. Yay. You can see them in real time, and this is honestly, if you're an options or day trader, this is where you're going to live. You're not going to live in the normal place that we live. And again, if you guys can't hear me or hear Brian, please tell us. Because this is the first time I've done this. Like, if it's super quiet, say something.
Razor Core says, "What's a computer?" So yeah, that explains it.
Okay. So this is the real-time data, and there's a few things I want to show people with this and why we don't day trade. So what you're looking at, there's a couple things. If you're a beginning
We're
investor,
looking at the Charles Schwab.
Thinkorswim.
Oh, I'm looking at the Charles Schwab thing.
Oh, you can't. That's right. I got to do this thing. All right. Okay. Do this. Share this. Do the Thinkorswim. Okay. Hang on. We'll get there. Okay, do that, and then make Brian big again, because he needs to be big.
There we go.
Now we got it. All right, Brian's got it. Okay. Is everybody with me? Are you all with me?
Now, here's a caveat to this. You're looking at one screen and one browser with multiple things on it. That's not how you day trade or do options or any of that stuff. You have to have at least 2 or 3 screens with different metrics on each screen and different graphs that you're watching all the time.
Yep.
This is just like a fraction of what it actually looks like.
So if you're going to day trade, I don't recommend it, first of all, but if you're going to day trade, the first thing you're going to do is you're going to check the news. You're going to see what's happening. The second thing you're going to do is you're going to check the fear and greed index, the volatility, see what's trading. Where's the volume? The third thing you're going to do is probably set up a watch list and find out who's buying and who's selling. Most professionals know other professionals in the same field, and they all kind of talk together. Most of their day, now if you think you work hard, these guys have a grueling day. They work from about 9 a.m. to about 11 a.m., and then they're done.
Yeah, I know. That's
the whole day.
I'm going to argue with you on one point that if you want to learn how all this works and get a fire hose worth of information, day trade, do options trading, like actually dig in and do it, because you will learn a lot about the economy. You'll learn a lot about how economics works by doing this stuff. And it's just, so yeah, but you're probably going to spend a lot of money to do it, but you will learn.
You'll go broke just like trying to buy aviation stocks, but
I would say
you'll learn a lot.
You probably spend as much money in college to learn this, right?
Yeah, so oh wow, that's a big trade. Who was that? So basically, what you're looking at, there's a few things here. So this is your candle chart here in the middle. And this kind of dictates, where the resistance floors are, where the support levels are. And there's certain signals, like there's a section here where you can analyze it and actually dig in to see where the push comes. Now, this thing that keeps moving around here, this is called the level 2. These are orders. They are not fulfilled orders. And something I want to caveat to people is a lot of times big institutions will put in an order and then cancel it intentionally. Basically, it's like throwing out a fishing line saying, wonder who's biting today. So they will do it. And a lot of this is algorithmic. Some of it's actual real people. But noticed how quickly those numbers are changing. So what you're looking here right in the middle, it says price. This is the price of the stock. On the right-hand side, these are, so picture like an auto auction or an estate sale. Hey, $10, I got $312, $313, $320. Like it's gonna keep going back and forth. People are gonna be like trying to sell something at a certain price. Those are the red numbers. These are the ones that say, hey, I want to sell it. The number there represents how many people are going to be selling it. And then the people that want to buy it here on the left, wow, that spread's actually pretty low. The people that want to buy it are on the left-hand side here. So right now you've got about 160 shares here that want to buy it at $312.59. Oh, and oh man, I wish I could. Oh, here you go.
You got to talk faster.
Yeah.
It's changing too quick.
Oh, I hate this about day trading.
It's like eBay, only really, really fast.
It's really fast.
Instead of 7 days, you got 7 milliseconds.
Yeah, so it doesn't necessarily represent what actually happened. Now, what represents what actually happened here is something called the tape. And I want you to see, I'm going to have to, there you go. So see this, this. Hopefully people can see this. This timestamp here on the right-hand side. This is seconds. This is 1 second. Look at all the trades in 1 second that you have there. So the tape is what actually happened. That's real transactions, real receipts, real people, real money exchanging hands. So if you're going to options and day trading, it has almost nothing to do with what's going on with the business. It's who's buying, who's selling, where's the money moving, who's moving the money, what is actually happening from a news standpoint that justifies what the action is. And that can change in the order of seconds. Like, we're not talking minutes, we're talking seconds. And as you can see, look at how quickly this is changing. Here we got 800. Oh, now it's gone. Oh, here's 320 at 1284. Oh, no, that's gone. Here's
and keep in mind that this right here determines what this current stock price is. So the spread between the bid and ask, that's what the current stock price is. So, and you could go in and tell it, not what the market buy is. You could tell it, I want to buy at 311, or whatever it is. And
that's what the
it will wait
is.
Until somebody on the bid side or the ask side will match you and buy it from you. Yep. So you could put whatever you want. And if like enough people put $50 instead of 312,
yep.
I mean, it will, and people start buying it at that, the stock will drop.
And it's fast. It's fast. It's really fast. So this, like when Brian you were just saying that the limit, you see this is buy plus one limit. That means that I want to buy it, but I'm going to limit it to $312.87. This is Apple stock. This is one stock. So I want you to get, this is not the whole stock market. This is one company. And I want you to see the volume. So today, this is one day, 112,000 shares were traded at $312.82. Look at this. See this here? There's 202,000 shares. Look at all these numbers. It's not uncommon. So that's that volume chart. It's not uncommon for a stock that's a Mag 7 stock like this to trade 10 million shares a day. Most of it's large institutions, 401ks. Very little is institutional holdings. So when I tell people this is why I don't short NVIDIA, let me explain to you why. There's a lot of stuff happening there, but look at the tape here on the right. When you see the tape, what you're looking at is actually going to be what actually transpired. Large firms don't say, I'm going to buy 10 million shares, because everybody would notice and they would manipulate and like nickel and dime them into an oblivion. What they typically do is they'll buy them in $100 stacks, or 100 share stacks. Like they'll do it in small transactions. But notice this little, right here. Where is it? There it is. Yeah, right here. So this is the scroller bar. So this is just a few minutes ago. So 4 minutes ago. Watch this. I'm going to scroll up. I'm still scrolling. In fact, I got to go faster. Here we go. Still scrolling. Here we go. Let's just trade.
35, 36. There we go. We got a minute.
This is all the actual trades. Man, Apple stock's busy today.
Yep.
There's a lot of sell action.
And
on it,
keep in
too.
mind that it's
Whoa.
not just this. There's
Look at
quantum
that.
investing that is taking place too. There are servers set up that will do 10,000 transactions a second, and Apple and the Mag 7 stocks being pretty heavily traded with that. So, I mean, they'll only make cents or dollars on each transaction, but it's the theory of large numbers that eventually it's going to become a great payout at the end. So, I mean, a lot of these I would guess that they are part of the quantum computing and quantum transaction. Not really quantum computing because it's not quantum computer, but that's what they call it. It's just a lot of transactions per second. You got to have one hell of a internet segment, and usually these are put like right at the stock exchange, so that they have a direct network to that.
This is a big transaction. The 3,000, yeah. So when I talked about shorting NVIDIA stock, I was talking like $10 million. That'd be hundreds of thousands of shares. But notice how many are anywhere close to that, and almost none of them are. As I scroll through this, and keep scrolling. That was a big one. But these are the actual receipts. Notice how some of these are like one share. That's 200. That's pretty big. 40 shares. There's notice how common 40 is. That's a big one. Somebody bought 855. But I mean, geez, I have to keep going. So here you go. Scroll, 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 just scrolling, still scrolling. Okay, keep going. That is only a few minutes. If you're going to day trade, this is what you have to look at. The level 2 matters. The tape matters more. The volume matters more too. You're not going to be day trading stocks that don't have a lot of volume. You also pay attention to what's happening in the news. CEO could come out, or a investor relations person could come out and say, "Oh, somebody just bought a bunch." So like, they could come out and say something negative, and the stock just goes. Or they could say something positive, and before they're even done saying, this chart will change massively.
Yeah. And I think we should mention, when he says tape, we're talking about ticker tape. If you go back to like the movie Trading Places or any of those, they had the little glass bowl that had the ticker tape that was giving out stock prices. And that's that's what this is. It was giving you the trades for that day that people are making, and you could watch it. Now it's electronic and it's a lot better, but ticker tape, it's the tape. And like a ticker tape parade in New York, that's what they used.
Yeah.
Ticker tapes. They used to throw it out the windows.
Yeah. Yeah, that's so imagine like the computer systems behind this. I would have to do this, but like, this is the reason why I don't trade is if you make a 10,000 share trade, it shows up here. So anybody they would see that and they would say, "Oh, Tom wants it at $13.10." Well, they're going to just like every couple pennies, kind of like Office Space. You get a couple pennies on every transaction. Like they would make it so that I wouldn't make good money. But this is also why if you say click buy market, you're going to buy whatever anybody at the lowest price is selling for. So if I was doing more than, it moved. Oh, it moved again. Here we go. 80. Oh, it moved again. Okay,
that's the thing.
42.
When you do a market, if it goes up, you're
again.
buying at the higher rate, right? It's just going to take whoever's buying at that time. Whereas a limit is you're getting what you want.
Yes.
Hopefully, if somebody's willing to buy it. If you're way out of the money, like too low, nobody's ever going to buy it.
Yeah.
But if you're way out of the money too high, like there's a lot of people who buy that. That's like a guaranteed sell.
This is where, I usually just do market because I'm not going to try to participate in this, not over pennies over the course of you're talking, these are just literal pennies. Over the course of 5 years, it matters very, very little. But I think about the volume here. How much is actually trading? Let me make this larger so people can get an idea. 108,047 shares at this price. 333,000. Like there's on this. Oh, there's almost 1 million transactions on this little section here. That's like 10 cents on one stock. If we pull up another one, let's just do NVIDIA. Why not? There's not enough money in the world to pay for NVIDIA if somebody calls that note. But look at NVIDIA. 1 million, 1 million. 1 million. These are all millions. It's all a million. Like there's so much going on in the background that once you pull back the curtain,
it's dropping.
Are they? Yeah, today's a down day. I wonder. Interesting. Okay. If you're going to involve in this, there's a cartoon movie called Soul, and there's a guy who's like in this nether world, and he's like, make a trade, make a trade, make a trade. This is what they're watching. They're watching this. And notice how the buyers of the stock always want to buy lower than the people who want to sell it. They're always lower. It's just like an auction. It's just like an auction. They will hype it to death too. And here we go. That's a really concentric. That's unusual.
Well,
there's a lot of volume today.
With anything, like when you sell your house, you want to sell it for more than people want to buy it for, right?
Mm-hmm.
And you got to haggle on a price and
yep,
meet them halfway.
Yep. Look at that. 2,400 shares at whatever the price that is. Let's make that bigger. Yeah, there you go. So this isn't even a full penny. These are that's a third of a penny. But this is going on real time. This is real. This is what's actually happening in the market. I want people to see this just to understand something. This is a different world than what Brian and I are doing. Very different. It's not even the same conversation. What we do is very different than what this is. You get.
I don't care second per second what happens.
Yeah, if you're doing this, you're probably gambling. This is why I say it's a giant casino. It's not necessarily wrong. It's a different skill set.
Yeah, it is possible to make a lot of money doing this if you are really good at doing it and analytic, and have some luck and intuition on your side as well. But you can make a lot of money. It's just most people don't.
Yeah, and I would tell you that from an order of magnitude, some of the most, I don't know, the most prolific, the best traders that are out there, they average so most people lose money. Average person makes between 8 and 15%. The best ones make about 20%, and the incredibly elite, it doesn't happen very often, go between 20 and 30%. Which
the Pelosi's of the world.
Apparently, that's where Brian and I have been for the past 4 years, which that makes me really scared because eventually we'll mess up.
And you're all going to get mad at us.
It'll be my fault too.
All right, since you're here, Spartacus wants to get us back on track and says, "What do you think about ADM stock? I've been thinking about buying it."
ADM stock,
using us as their
personal finance. I'm not your financial advisor, for Spartacus.
Yeah, we got to say that every stream. We are not your personal financial advisors. Please seek one out.
Yeah,
we are here for educational and informational purposes only, and mild entertainment.
Yeah, actually, excellent entertainment. Nobody entertains like we entertain. So I'm hoping that this explains the different skill set, the different mindset behind what day trading is, what options are, what that is versus what we do. We're treating this as we care about the company. Options and day trading is more about who's selling and who's buying, and where's the money exchanging hands. What are people willing to pay for something?
That, and as Matt says, we care about our blood pressure and overall health.
If I did that, I wouldn't have started a company. I mean, nope. No, you're right. All right. So what did he say? ADM stock?
ADM, yeah.
ADM. Isn't that like tobacco?
I don't know.
Nope.
Human and animal nutrition.
Here you go. I'll let Brian read this.
Okay, let me get my announcer voice. Hello. Archer Daniels Midland Company provides human and animal nutrition ingredients and solutions in the United States, Switzerland, and Cayman Islands, Brazil, Mexico, Canada, the United Kingdom, and internationally. It operates in 3 segments: AG services and oil seeds, carbohydrate solutions, and nutrition. The company engages in the origination, merchandising, transportation, and storage of agricultural raw materials, as well as the crushing and processing of oil seeds, including soybeans and soft seeds, such as cottonseed, sunflower seed, canola, rapeseed, and flaxseed.
What is rapeseed?
It's a seed. It's a seed from a plant. It's an unfortunate name for...
Yes.
Because they used to... The rape... Anyway, before it was a condescending term.
Brian knows.
Produces... I know the history of rapeseed. Produces and markets vegetable oils and oilseed protein meals used to buy food, feed, energy, and industrial customers. sale of crude and partially refined vegetable oils, supplies peanuts and peanut-derived ingredients, and manufactures cotton, cellulose pulp. Yep. So it's a grain and oil seeds. They've been attacked for like the last couple of years, the seed oils, for being not great for your health.
So food products, not a bad place to be in.
And our agricultural food products.
Let's do a quick 10-second overview of what we think might be what these guys look at.
What is this, their year? Do their 5-year.
Whoa, split. What kind of splits are these?
Split.
Good. Reducing shares, reducing. These are good splits. That's 1994, though. Let's see where they're at today. They're trading near their high. That's a warning. Pretty big.
Unless
red
we think
flag
they
there.
could bust through their upper range there.
Yeah, let's look at if they can afford it. Low dividend, that's a good sign. Pretty consistent. They cut it, which that is probably why the price exploded after that, because their capital increased. Good payout, good coverage.
Yeah.
Let's go look at their earnings. They beat the last.
Beat.
Yeah.
By the last one's by quite a bit.
Gross
What
suggested earnings.
No. Say it right.
I don't want to.
Say it right.
Meme.
No.
It's a meme stock. It's not a meme. It's not generally accepted accounting.
Chat, what is it?
Total operating income. Oh, they're having trouble.
Razor Core says the DD's financial advisors and official advice to live by.
That's right. We are monks on a hill. We know everything.
Matt
That's why we're bald.
You're not my financial advisors, but I am so glad that I followed you and bought the Cisco stock when I did. It has more than doubled. It has more than doubled in value since then.
Hey,
You're welcome.
Till it goes down, then you can blame Brian. It's not my fault.
Now you got to decide whether you want to sell it and lock in those profits. It depends on how long you bought it for, I guess.
That's the hard part about because like Intel, it was up 500%. We're looking at the balance sheet, look at the financials, looking at book value, looking at all the stuff. It's like, well, yeah, that's cool, but then you got to, when you sell it, you got to pay taxes, and then if it's a long term, it's
Have you had it long over a year, or is it under a year? Are you going to pay regular taxes on that? Yeah, it's just easier to keep it.
Yeah, I have trouble selling. Brian knows I agonize over this. I do sell. I mean, you saw it earlier in the stream. We had the 53,000 or 55,000 now of profit, but it's like, there's a catch. There's always a catch. Because if you're selling a stock, somebody buys it, somebody thinks it's worth more than you do. Why is that?
Because there's always an idiot out there that will buy it for. There's a sucker born every minute, right?
Yeah, because Brian obviously knows that I'm always right.
that's the P.T. Barnum, right? There's a sucker born every minute.
So then, if you're buying a stocks and you think it's worth something, somebody thinks it's worth less than you do, and you got to ask yourself, why is that? And if you compound that with taxes and fees and all that, it's hard for me to want to sell. That's why I buy the companies I do, because I know that the market's going to gyrate and whatever, it does what it does. I don't care, because I believe that for the most part, if you go without goldfish, the world will end.
But for me, going back to the whole selling thing, when I put an order out to sell, and it takes a while, and then eventually sells, it's like, okay, but when you do it and then you look and it's like, I mean, if it's a pretty big order and it just fills, it's like, oh crap, what did I do? People are buying this.
Yeah, when I sold, I sold Colgate stock some time ago, and it was like $100,000 of it, and it took 3 weeks. Because the stock was just flat. I thought, oh, okay, that's pretty normal. When I sold Intel this spring, it took 3 days, and it was the same amount. It was like $120,000. Oh, what did I just do? But if the stock's going down, you go to sell, it's an awful scenario. If the stock's going up when you sell, it's great, because you're going to get your money.
Exactly. Matt said I sold the Intel, but that wasn't paying dividends, and I couldn't pass up the profit. Agreed.
Yes.
I had it long term. Cisco is also a long term one for me, but I see no reason to sell it. Yeah, Cisco's going to be around. they've been around for a while, and they're making some moves to better their company. So
They
I
need
think
to. They got
holding
competition.
holding on to it's a good idea.
They got competition. Unify is nipping at their tail. They're not there yet, but they're getting close.
Yeah.
Cash from operations, that looks okay. Net income is cut in half, though. So this is ADM. This is the Spartacus. Is that you? Spartacus stock?
Spartacus.
This is kind of like a nuanced stock. This isn't they ain't great, but they're not bad. And this is part of the ain't great thing. Like they've been burning money. Their original balance. So if you look at their cash flows, this is annual. We always look annual when you're looking first at these things. So the what they had in their bank account was $4.6 billion. Is that billion? Billion, yeah, $1 billion. That's insane. Can you imagine going to the bank saying, "Yeah, I'd like to cash my, I'd like to cash out." How much do you have? 4.6 billion.
Okay, that'll take a while.
Like, who would do that? How many banks would have to get together to write you a check, and could you even do it? Chances are you're not going to be able to get that. Like, you're not going to get
not
it.
from like a Fifth Third. You got to go to a major bank.
Most of those banks have money in people's homes and stuff, so that would basically run the market. So when people tell me Nvidia's going to 20%, I was like, no, they're not. Like,
we need $5 billion. Give us like a year. We'll collect that for you.
I don't think there's enough money on the planet to liquidate Nvidia.
So there isn't. Yeah, we checked that. There's not enough. Like the whole currency system would go. You'd own all the money.
You'd
have it all.
You'd be no worries about being stolen from.
They'd have to start printing more like actual currency because nobody would have any. Razor Core says Cisco is making Meraki worse. I'll tell you that. And I would say that Meraki made Cisco worse.
I would agree with Brian. Sorry, Razor Core. I do not like Meraki.
They're gutting
only because of their price.
They're gutting all the features out of their license subscription without reducing the cost and then licensing them separate at additional cost.
Yeah, I hate that model.
I do. Fucking Adobe. I will never forgive Adobe. I will never forgive Adobe for introducing that licensing and subscription model to the world.
Everybody followed suit.
They did because they saw how much money they were making.
Oh yeah,
Adobe was making money hand over fist, and like, oh, that's a great idea.
It's like the manpower and labor ready to the professional staffing industry.
Yeah,
it's like, come
Screw
on,
you, Adobe. That's why I do not buy Adobe products anymore. I refuse.
We will never be sponsored by Adobe then. I'm sorry.
Sorry.
I'm sorry,
no,
Adobe.
that's fine. There's so many other corporations out there that'll sponsor us.
So assets on these, this is a nuanced stock. I think that if I was in Spartacus's shoes,
by
couple...
nuanced, do you mean meh?
Meh. I mean meh.
Meh.
Meh. It's a mess. It's not a necessarily meh because there's things here that look good. Total shares outstanding are reduced. Their operating income did get cut in half. If you look at their liabilities versus their assets, the liabilities are not telling the same story. They've gone up and then back down. I would want to know what Archer Daniels is doing as a company. So I would sit in on one of their investments, I don't know, what do they call investment calls? Can't think straight today. But they'll tell you what they're doing with the money. And what you're going to want to look at with these guys for a mid-cap company, which is, I like mid-cap companies, you're going to want to see what they plan on doing, particularly with expansion and how they're handling the supply chain issue going on, because that's the big story especially because if you look at where they say they do business, they say they're United States, Switzerland, Cayman Islands, Brazil, Mexico, and Canada, United Kingdom. So they're in the West, right? But there's still this giant war going on with Bayer and who's getting to get the share of the market without paying all the fees. So you're going to want to look a little bit, and this might be digging into the weeds too much, and maybe we don't care if you're only going to spend a couple $100 on it, but what their tax structure looks like. United Kingdom tax structure is very different than the United States. Where are they paying their fees? Canada is also brutal compared to the United States. So if they're headquartered here, which I think they are, Solutions United States, but it says here all these other countries too. So take a look at what regulation is going on in the food industry. Monsanto, before Bayer bought them, they're very heavily regulated, and especially in Europe. So if most of their business is coming out of Europe and we're dealing with water shortages and you're dealing with tariffs, you're dealing with logistical problems, I would say at their current high might not be a good time yet. Maybe later this year, once we know what happens in November. Because all that stuff just started kicking in. That didn't start kicking in until, like, what was it, June? All the stuff that they were passing for the Food Administration. But, yeah. Pet food. They make pet food.
They do.
We're hiring. Hey, wonder what they're hiring for. Why do
Time to go off the rails.
They have hard hats. Why do they have hard hats?
Because they're at the docks, man. All that pet food can come crashing down on your head. And that helmet is going to help you.
All right, I got to criticize something here. Does anybody ever work in the factory smiling like that?
Maybe somebody told a joke. They caught him.
You're getting a huge pay raise. And then they smiled. That's an AI image. Anyways.
Some would say you're an AI image.
Yeah, well, maybe not a good one. Adobe can pound sand in Death Valley. Razor Core agrees with you. What else we got? What other companies we got to look at?
Let's not look at Adobe.
Let's look at Adobe. I'm going to prove everybody wrong.
They need to burn it with fire.
Could look at Broadcom. ADBE. Adobe. This is where Adobe laughs you all the way to the bank, Brian.
$265. Oh, they're down.
Except they're not laughing you to the bank right now. They've had a bad 3 years. They've had a bad 5 years.
It's because of their subscription model. Everybody's sick of it.
I'm gonna buy Adobe now.
Well, the problem is there's things like DaVinci Resolve. There's other products that are doing as good as them now. And they're not free, but they're not a subscription based. So people are ditching Adobe for these products that are doing a better job or just as good.
Buy AMC movie stocks? Seriously? No, man. All these check out the home theater projector space right now.
The temptation to sell when as profit to be made is strong. But when the price drops, I don't even worry about it, since I can always buy back in cheaper, happening with BTI, the $26 a few years ago. Yeah.
Yeah, okay. Here's a good one. Look at this. Market cap, large cap, 99 billion. Enterprise value, 100 billion. We saw that with Intel.
They're not a small company.
No, but the market cap's smaller than the enterprise value. So that's an interesting story. And they're beating on their earnings. And maybe if we buy these guys, they don't pay a dividend. But maybe if we buy these guys, you can sit on the board or like the investor call and vote and say your subscription model sucks, and they will laugh you all the way to the bank. They'll say, we don't care.
They're saying, but we're making 37% on that.
That's actually a pretty typical profit of an HVAC company. 7%, 10% per labor, and 30% for parts.
Yeah.
So total assets.
They would laugh at me though, terribly.
Hey,
we don't care.
Mocking me. Everybody's laughing at me. Liabilities are up by a lot. So assets are not as much, but liabilities jump by more. Are they diluting? They are actually not diluting.
Oh, we hit a nerve with Razor Core. I just installed on an Adobe Suite from 2013 on a Windows 11 computer a couple of weeks ago. The software was pissed about being installed on a modern CPU, but it works.
Adobe, he's going to get hacked. You're going to get a virus, dude. It's going to be vulnerable. Like, you're going to log in one day, you're going to see nothing but Chinese or Indonesian characters. It's going to be all written in Indian. Or Canada. It's going to be Canadian. Even though that's English. It's not English.
All the Adobe security flaws.
You think it's English, but you didn't say the same thing they said. They said something completely different about your spouse. So total revenue, here's your subscription model for you. Check that out.
I know. I told you they're making money. It's not a problem with them making money.
Their operating expenses, though, are up 50% too.
Yeah.
They did not go, well, actually they did.
Their total operating income went up.
Man. Anybody
Doesn't
who
mean they're
says-
right.
Yeah. You might be rich, but you're still wrong.
I don't care. I still got my 175-foot yacht.
Off the grid yacht.
Yeah. It's fully solar. And Spartacus asks, wouldn't it be better to buy Oracle?
I've heard oracles have been having some problems lately. We can go look at them next. Total cash from operations. Wow. Adobe looks actually pretty good.
Yeah.
The problem is they don't pay a dividend. So like you see they don't show it here in the investing, financing activities. Like there's no dividends paid, so it's not going to show up here.
This is my moral buy. I can't buy them just because they're Adobe. Sorry.
I don't care. Well, for me, it would have been Nike because I still bought Nike. Oh man, because they're burning through some cash. That's the problem.
Razor Core's still going off. I think the client would be fine with Chinese characters as long as they didn't have to pay an Adobe subscription.
It'd be super mega ultra sale.
All right, we found Razor Core's white whale.
Actually, it's probably like 10 different topics in IT, and that's just one of them.
That's one of them.
That's one of them. Oracle side. I actually, if you don't want to pay taxes on dividends, so if you've got a bunch of assets sitting there, Adobe doesn't look too bad.
Well, especially since they're down, it'd be maybe a decent value play.
I mean, think about it. They're net
down
income,
60%.
Yeah, their net income is up. Liabilities, operating cash flow, everything looks good, and they're down 60% from that high, and they're still beating their earnings. And people aren't just gonna, despite we hate the licensing model, there's not a lot of competition in the space unless you talk about AI. AI is actually starting to bleed into it, but Adobe's using AI, so might not be a bad one. That we accidentally stumbled on a pretty decent one.
Yeah.
We were raging on them, and they were like, "Oh, we're actually a pretty good company." Yeah, I mean, 30%. You were close, Brian. You were close.
Like I said, it's not because they aren't making money or they're not a good company. They're just the subscription model kills it. That's it. I'm dying on that hill.
Look on the return on equity for these guys. The money they've given back to us. That's incredible.
That is.
That's a good. If you want to have a growth stock, maybe for the next year or two, that'd be a pretty good growth one, I think.
All right, Spartacus, go ahead and buy it. Buy some Adobe, and then report back in a couple months and let us know how you do.
And then blame Brian for all of your financial woes.
No, you can't, because I'm not your financial advisor. I already said that. I'm covered, right, lawyers out there? That's all I need to do.
That pretty good one, Oracle, right? Oracle. I think it's Oracle. They changed their, OR.
Oracle.
They have. And this is actually a really good contextual map for this. AI came out. They've been struggling with that because of it, but like over the past 5 years, they're still up 60%. That's insane to me. Here, look at
July
this.
25. They skyrocketed.
There's your options, people. So that's somebody looking at the volatility chart and going, "Ooh, a lot of people want to buy. They're in on this stock." Oracle trades a lot too. If you go back and look at the volume of it, big company. So intraday volume. Let me shorten this out so you can see it. Not a lot going on now, but here you had, was it 10? Oh my gosh, July 16th. That's 10,673,878,687 trend. Like that's how much volume was for that one day.
Yeah,
10
some
billion
fractional shares.
That's insane. That's a lot.
That is, and keep in mind that these are the parent company of like Paramount now and Skydance, and right.
Yeah,
this is his kid's company, so this is Daddy's company.
What did he say about Oracle? Who was that? Was that a Spartacus thing?
Yeah, Spartacus said wouldn't it better be buy Oracle.
All right, so this is going to be a little different. My answer is it'll make sense. So bear with me. How much does it cost to mine 1 Bitcoin? So 74,000 to 87,000. These are these AI GPUs. And the market price for Bitcoin is about 64,000. The problem with AI stocks and like Oracle is the infrastructure that maintains these things is incredibly expensive and it doesn't last long. If you want to look at something here, I'll show you this. Passmark.com. All right, so we're going to go here. We're going to look at CPU benchmarks. If you pay attention to the CPU benchmarks of Passmark, so we're going to go multi-thread. We're going to sort it by high. This chart is always changing. So for a company like Oracle that's getting into AI and ERPs and CRM systems, that is a it's kind of like banking is to owning physical real estate assets. They're usually really heavy on liabilities. For these guys, it's not heavy on liabilities. It's heavy on like just the churn, the operating costs. Now, technically that's liability, but like what you're looking at here is a company that is in a space right now that is incredibly inflated. They're a Mag 7. The assets are inflated. The cost to build those assets. So like if Oracle says, I want to upgrade my servers, this is where I would caution you. And I know this because I'm in the field. When hard drives were being sold, like a typical, let's just say a camera or a SAN drive, this is an enterprise level hard drive. This is storage for viewing footage or databases. I think they were going for about $400 or $500 for a mid-level drive per drive. Today, those same drives are over $1,000. You're like $1,200 per drive. So take a look at the cost of RAM. Take a look at the cost of hard drives. Take a look at the cost of processing. I think right now, a lot of these AI companies, when it comes time to cycle their assets, those costs are going to be a lot higher than they budgeted for. You can't budget a double of expense increase. Just like the people that are, like I showed you here, how many people were mining Bitcoin and built their data centers to mine Bitcoin, like these companies that do this when Bitcoin is over $100,000 per coin. Now you're talking, it's at like, think about how much money these people are bleeding. It's at 64,000. So you mine 1 Bitcoin, you're not going to do that. You're not going to take a loss for $10,000 of Bitcoin. You're just going to shut down the whole farm. Meanwhile, most of these companies are not, they didn't finance, they didn't put this stuff on cash. They're like, hey, here's a check for my data center Bitcoin farm. They financed it. They put it on a loan. They got payments on this stuff. So that is causing these companies to bleed real heavily. So there's going to be a couple things that you're going to want to pay attention to for anything in technology, anything that's very heavily with data center stuff. IBM's got this thing. This is why Intel is such a big deal, that the cost of just having those products, to get the products to renew things and like refresh your servers, the databases, even the software development teams, which could offset it with AI, because AI is now doing a lot of programming for a lot of these companies. So that could help Oracle, but the cost of the actual materials is going to be huge. So you're going to want to pay attention to that. Also pay attention to, and this is where I diverge from a lot of people's thinking, AI is very helpful, but I don't think you should fire 50% of your programmers to have AI do that. Brian keeps looking up at the sky like he's seeing Jesus. There must be a bug in your room.
Sorry, I was messing with my lights.
So this is it's nuanced. AI is nuanced right now. If this is 3 years ago AI, I would say, yeah, that's a good play because it made more sense. But right now we've got materials costs, we've got a supply chain backlog, we've got tariffs, we've got chip manufacturing facilities that are having problems keeping up with demand because of AI. So the price is ballooning. So the operating cost of these guys is going through the roof. And I think we might actually be able to see that if I do it by quarterly. So if we take a look. Nope. Income statement. We actually go look at cost of revenue. Yeah, so you can see, so this is quarterly, Q4 2020. So I said all that stuff, and let's see if the numbers actually back up any part of what I think is true. Sometimes it doesn't. Sometimes I'm way off in left field, but don't tell my wife that because I'm always right. But no, we've got operating expenses here. Look at what's happened the past 5 quarters. So you got 10.1, 11.3, 11.7, 13. So that's 30% higher. That's probably not entirely related to just the materials cost. There's other things happening here. So you can see like R&D, you can see general admin expenses. Those are pretty, like those went down. Labor related expenses, those went down. I know they've had a lot of churn. Like if Facebook's doing the same thing. General admin expenses are about the same. Cost of revenue, here you go. This tells the story. The cost of making that money has gone from 4.7 to 6.7. 50% jump. So before I bought a stock like this, Broadcom is another one, NVIDIA is another one. I like NVIDIA, but you need to pay attention to what's happening in the materials world to supply the products to make this. Silicone is hard to make. So that speaks really well, though, of like Qualcomm, TSMC, Intel, like the people that make these chips, the semiconductors and chip industry. IBM's sort of out of the industry, but something like that, where they could benefit from this. So in that respect, if I would buy it, I would be paying attention to that stuff because that stuff matters more to me than whether or not they're at a good price today. Because what you don't want to do is you don't want to buy now and then find out that, like, it's like buying a car. You're thinking, oh, my car payment's only going to be $300 a month, and then finally you get it all like licensed and you get the insurance and everything. You find out, oh no, wait. It's actually like with licensing, the like getting your tags in the car and getting the full coverage insurance and all that. Oh, it's $500 a month. Like you don't want that. And I think a lot of the AI companies are going to be doing that. Where the crossing would happen is, I'm not sure this will happen. I'm kind of, Brian doesn't know this, but I'm somewhat pessimistic about crypto.
No, never.
I would say that like if this starts recovering where it gets over that, you're going to see these data farms spin back up again. You're going to see like material costs hopefully get better. When that happens, then stocks like this will be good to go. But however, Mr. Market, like we saw, was it 10 billion transactions in one day? There are a lot of people that think this way. There's a lot of analysis that's out there that thinks this way. So yes, as of 1 year, they're down 40% on that year. That's probably why they're down. What you're looking at the ticker symbol, you're looking at what people think the stock will do in 6 months. So people thought, oh, they're not going to do good because of probably these reasons I mentioned and 45 other reasons that I haven't thought of yet. That's fine. If you're going to buy them long term, you'll be fine. And I'm talking years. I'm not talking weeks or months. However, if you're looking for a value mismatch, you're going to want to pay attention to those things. That's why it's so hard for Brian and I to find this one neat stock that will make you rich every year. It's hard to do that because you got to think big picture. So anyways,
Spartacus, you hit the nerve,
me.
you know.
You triggered me.
You wound up the Talkie Tom doll and just let it go. Just pulled that string. So what he said is thanks. What you're saying is that everything related to AI is about to fart.
Boy, that's a loaded statement.
That is.
That's another wind-up Tom moment.
Yep.
So
okay, we got another 30 minutes, so I'm going to go get something to drink. Go ahead and talk about that, Tom.
If anybody ever thinks that, like, oh, Tom's just doing this because he wants to make money, or if they think that Tom actually likes doing this stuff because I like learning these things, if that didn't tell you that I, like, look at this stuff religiously, kind of like, I looked at cute girls as a teenager, I don't know what will.
He likes looking at this stuff.
I do. And Brian and I both do.
And you happen to pick a topic that, because, we're in IT, so we're pretty involved with the whole AI movement. We're involved with all things IT servers, networking, switching, routing, traffic, all that stuff. So once you hit on that subject, we have a vast knowledge of how that all works, and then we translate that to the companies that supply those things, the equipment, the servers, the services. And so once you get that, like, there's all this information that needs to come out, and it does.
Razorcore, you are correct. So we have a Kajabi account. I'm seeing Matt said, do you notice that Oracle was baking?
Hey. Stop,
okay,
stop.
Fine. Brian does a comment. Brian does.
I was going to comment on that because there's no way Matt came up on that on his own. He had to have got that from the internet somewhere. So go ahead, read it.
No, you do it, Brian. Brian's got the sexy radio man voice.
He said, "Did you notice the
See?
oracle in the Matrix
You got to wink too after every sentence.
was baking and made Neo take one of her cookies before she would talk with him? The oracle made Neo accept cookies in order to proceed. So oracle made you accept cookies before you could
And I deleted
use
them
their
shortly
products.
after that. I think that's a very nerdy joke, but anyways.
Delete. What do? Throw it back up?
I
I don't
accepted
know.
only the essential cookies. I rejected all the other ones.
You
So
can
by
just
there-
have AI
no.
learn for you.
Actually, Razor Core. So Brian and I have a Kajabi account Brian's working on. There's almost nothing in there right now, but I've been training AI in my thought process, and it's equally as confused as all of you. But no, it's I've been training it on value mismatches and stuff. We're gonna probably put something like that in our Kajabi where you can see the ones that we're looking at and why we're looking at those inside of that account, just to bounce it off of your financial advisor and your own noggin on what we're doing. Like what we'll eventually do in there is we'll have it where all the research articles that we research and look at, all the stuff that you see on this top screen here, that will be in there so you can follow along with us and comment and say, you guys are stupid, real time.
And I have been posting stuff in Kajabi. So if you do go there and sign up, there is actual stuff there that we are looking at. And you could kind of get an idea of what we're going to talk about in the next stream.
Mm-hmm. Or
So
what I'm in a nerd rage over, apparently, which is Oracle. I had no idea we were going to look at Oracle today.
That's the thing. And Spartacus says, that's why I like watching and listening to them. And by them, I think he means us. I'm always learning.
Us too.
I'm gonna assume it's us.
we like watching and listening to us too. I watch it in the bedtime. I listen to myself when I sleep. That's why my wife doesn't sleep with me anymore.
I record it and just listen to it over and over.
No,
I think, God, wow, we are really smart guys. Man, I said that perfectly.
That Tom guy, he's just so amazing.
He is.
The world must revolve around him. What is
that word?
Oh, Kajabi. It's Kajabi. Yeah, I don't know. How do you spell it, Brian?
Kajabi. Kajabi.
Kajabi.
It's like Patreon, but it's Kajabi.
Let's look at the government debt auctions. Are those going up or down? They are. Oh, people are buying. Oh, no, they're not. Prices keep going up. Who would buy a 30-year US? I mean, people do.
30-year?
But 30-year U.S. government debt at 5%. That's a pretty good APR, though.
Maybe if it's for my kid, for like when they get old.
Look at their, not the AAA ones, but so this is the credit ratings. So in case you're wondering, like this is their, how do I describe this quickly? So like if you're looking at AAA, AA, single A, this is not like batteries.
That's the rating.
Is there even is there a single A battery? I don't know. But like this is their credit rating, basically. This is how good they are financially. But look at the single A one, 7%. That's getting pretty, it's not 1980s, but man, that's pretty good. So the U.S. Treasuries, 5%. We are bleeding over almost at 4%. It's getting there. It's getting there.
Yes, single A batteries do exist, but they are rare and largely obsolete for consumer electronics.
What do they look like?
It looks like it looks like an A battery, like a double A battery,
We're
only
going
bigger.
to squirrel again.
It's just bigger.
It's a real cylindrical dry cell. How about do this? Images. Oh, yeah. Okay.
It's somewhere between an A and a C.
It's like my college grades. It wasn't quite there. All right. So if we go and we look at, I think my family's home. I should probably close my screen. Before I do that, let's go look at some stocks, shall we?
It's a 3-volt.
Really?
Yeah.
Huh. Okay.
All right.
According to Copilot, size, designation, diameter 17 millimeters.
Size matters, Tom.
It does not.
No matter what they tell you, size matters.
Yeah, yes, it does. All right, so let's do a screener, and then I'm going to have Brian read these super interesting things. So we have Procter & Gamble stock. We have they acquired. So we talk about acquisitions that happen and company sales and buyouts. Kimberly Clark is buying. It's not Solventum. The Kenvue, I think the spinoff from Johnson & Johnson, which Johnson & Johnson like let go of them. Now Kimberly Clark's buying them. This stuff happens all the time. AT&T and Warner Brothers, like I can keep going and 3M and Solventum. So this is one that is in our portfolio. We're just kind of curious what the news is on this. We've got a few other things that we think are very interesting. Brian, you were talking about the Rand Paul testimony with Fauci.
I was. I've been following that.
We have horrible stuff going on in Cuba. No power.
They don't need no stinking power.
I can't imagine. We got the Spartacus.
And it's like 106 there.
Oh, that's right. I got to hit a paywall on this one. This one is, so I want to pause it. Stop. No. Oh, go back. Talking man. There. That's what's going on in Spain. That's pretty crazy. In Spartacus, I checked into it. It's actual, like most of them are young men. That'd be freaky.
They don't want to join the army.
And then we talked about SpaceX stocks. I had a bunch of people saying, do not sell or share my personal information. Okay, bye-bye. Get unlimited access. Oh, Bloomberg, why do you got to do that to me? So SpaceX stocks, somebody talked to us about why, we'll start with this one, why we didn't buy SpaceX. Now, when I buy a stock and I look at the stock, I see it as a loan. I've been trolled for this almost monthly by somebody. It's not a loan, Tom. I know that. Generally accepted accounting practices. But like, or Mimi.
Principles.
Yeah, I know it's, you get trolled again. But no, like I see it as a loan. When a government like the United States needs to pay for its operations, they issue bonds or pay for their debt in this case, or a T-bill. People buy that with the promise that they'll get paid some interest. When you buy a stock, kind of like if you go to a bank and you say, hey, I want to get a car loan or I want to get a house mortgage or something like that, the bank will charge you interest on that. And the U.S. government says, hey, buy our debt, we'll pay you interest on that. When you buy a stock, and SpaceX is a good example here, that company is raising capital or equity so that they can expand their business. Now, you're betting on a few things, that the company will actually do better, or that the $50 of hype that because SpaceX was, the hype was insane. There really was like $1 of value and $50 of hype, but they're raising capital in a way that, do I think SpaceX is a bad company? No, I think they're doing amazing things, but you got to see past that to where is the company actually making their money. And SpaceX, there we go. Oh, they got so many different ones. We'll do this one. So when you're looking at the business, it's only been 1 year for them. So we got to go.
Not even.
Yeah, this isn't the actual ticker symbol. Stock. Here we go. I want to show people this. I think they'll like this. SPCX. That's what I thought it was. SPCX. Yeah. Okay. Well, this is right.
That's it.
It just doesn't look as dramatic as I would like. Here, so maybe I can zoom in and make it look dramatic. There we go. That looks like a nice little snow hill. When you buy the stock, you're betting on like the company will do well long term. A lot of people will buy it based on, I want the price to go up. Okay, but you got to look at why the price is going up. So when SpaceX did their IPO, basically, and this is not just SpaceX, this is like if anytime you want to see that there's a recession coming, and look how many IPOs there are per quarter. The higher they get, the more recession's coming. And that's an intelligent investor thing. You can look at that up. They talk about that in there. They got on Trump, right, for overvaluing his assets. They're like, oh, it's not worth that. I don't know a single person on this planet that actually values, like they say, oh, my home was worth $1 million. And then when they go to try to sell it, it's only worth like $500,000. Like, I don't know anybody that doesn't try to overinflate how much they're worth. So when a company does an IPO, what they do is they say, well, this is what I think it's worth. They're doing the same thing. They think this is what my operation is worth. This is what I think it'll be worth in 5 years. This is what, we think that this is all worth. Now, you want to see a good story on this. Hopefully this isn't like a porn site. Yep, that's a here
Just Google Dorani and
There you go. How about that?
IO.
So this is a IPO company. They aren't quite public yet. They got a ticker symbol reserved, but they are raising stock. This is a personal flight business, but they're raising this to grow their company and scale. Now, do I want a flying car? Yes. Yes, I do.
Shoot, yeah.
But they don't have to pay back their loan. When you get a loan from a bank, the bank's going to come take your house if you don't make your payment, or your car, whatever you got the loan for. There's leverage. When you buy equity in a business, this is why people say, like, hey, be careful when you're buying this. They don't have to pay you back. You're buying a ownership stake in the business, like you partly own the company, but because you're part owner also means that if they lose the money, so do you. Tough beans, you're out of luck.
And there's no guaranteed interest rate. Like when you get a loan from a bank, there's an interest rate, 5% or 7%, that you're paying on that loan over the life of the loan. Whereas this, you don't get that. I mean, you may get some sort of investment ROI on your investment, but there's nothing guaranteed saying you're going to get 5 or 7% back like that.
Yep. And this is where, like, if you look at this chart here, they don't even say actual revenue. They say $240 million in potential revenue. They have to be able to do the job, but they can't, like, they're not there yet. But they've had $35 million where they're FAA approved, which is great. I think these guys are, it's a pretty cool company, pretty cool car. Like, that's the car. But, like, they don't have it yet. So when you're investing in these businesses, keep that in mind. Like, they don't have to pay you back. And there's another really good example I have here. And we had the stock in our portfolio for a while, and I'm actually shocked. It went up 20%. Like, I didn't think they would, but they did. So here's one. This is called an REIT. They pay a big dividend. They pay 12.58%.
This is right up Spartacus's lane here.
They have massive payouts, but think about what happens. I look at their 1 year chart. They're still going up. I can't believe that. We sold them right around here, so we did pretty good at their absolute high. But I want you to think about, you give them $1,000. So you're going to give Anelli Capital $1,000. It's an REIT, it's an investment, a real estate investment trust. They're one of the largest mortgage-backed security kind of companies in the United States. So they're not going anywhere. It's a good company. But remember, you give them $1,000, say, I'm going to pay you 12% per year. That sounds good until you realize the taxes and fees. Every time you do a trade, there's a small little fee. If you get the dividend disbursement, you pay that in taxes. So you pay income rates, not capital gains rates. So if you get, let's say you're in the, well, for me, it's 39%, but if you're in the average tax bracket, you're paying between 25 and 30%. So let's just say it's 30% to be even, or 25% to make the math easier. I'll give them the benefit of the doubt. If you're going to get a $10 out of, let me see. Yeah, it'd be $10 roughly per month on $1,000. That's actually only $7.50 to maybe $7 per month in a dividend check. That's after taxes. Now, the fee is going to cut into that a little bit more. So think about what happens there. Sure, you're going to make the money on the dividend check, but you're going to be paying taxes along the way. So instead of, like, they have to do two things to make it so that the money that you gave them works out. One, they have to exist more than the 10% per year. So they have to live longer than 10 years, and LA Capital will. Two, they can't dilute their shares, because if they do, then the price of the stock goes down. So like I said, this looks good on paper, but watch what happens when I zoom out. Let's go to max. Here you go. What you did back here, so where were we, 1999? Okay, so you're if you're 40 years old, you're 30, you're 10 years old now, back in 1999. But, like, let's go and let's look at, for example, Anelli Capital 2004. Let's say you bought them during the height of the recession. So 2008, you bought them, like, at the worst possible time. In fact, I'll even go back lower than that. Let's say you bought them after just before the dot-com bubble fully recovered, in between the dot-com bubble and the recession. You bought them at $43.78 per share. Yeah, by the time they paid me dividends. Yes, they did. You pay taxes on those dividends, but look at the dividends: $2.60, $1.80, $1.20. Notice the dividend is going down: 88 cents, 88 cents, 65 cents, 75. So finally it started to recover.
So you're losing monthly income every time that does that.
yes, you are not necessarily making money long term. What they're doing is they're paying you back their principal in the form of a dividend. And even then, because they're paying such a huge, now REITs work a little bit differently. And there's a lot of companies out there that are called dividend traps. I wouldn't call these guys necessarily a trap, but they're hovering there. They're getting close. But like what you're looking at here is a $2.20 dividend. Now remember, if you needed this for income and you wanted to retire, let's say you're 65, I want to rely on this for 20 years. 20 years later, your $2.20 dividend is now 75 cents. You are now making 1/3 of what you were making back then, and inflation. How much was a house back then? How much was a car back then? How much was the stuff that you had to buy back then? So you're getting destroyed on your dividend and the cost of inflation and the fact that you're paying income taxes on this and your principal. So and. So you went from like $43 a share. Now you're at $23.12. So your money got cut in half. Sure, you got paid, but you didn't get your money back.
Now, you're not realizing that loss until you sell it. But if you need that money now, and you had to sell it, now you're realizing 50% loss on that money, and perhaps
it's harsh.
if you need like an income tax loss, loss porn to harvest to help you out, but that's not a great way to live, losing money like that.
Here's the other thing. In order to keep this whole thing going, and IEP, and there's a few other ones that are in there, I like Anelli Capital. I wish that their dividend was closer to like 7%, because then I'd be like, yeah, game on. But for whatever reason, they want to keep doing this. And I think they should fix some of their liability problem. Because look at their liabilities. So let's go back. Yep, this is annual. Good. So they went from $63 billion to $120. Their liabilities have doubled. Their assets, $76 billion to $135, so not quite doubled. So they're getting more debt. They don't have as much stuff. When you go and you look at their operating income statement, let's look at that. Operating expenses are up by 10 times. Operating income is flat. That is not a good thing. So if you're trying to buy a company, say, oh, they pay 12%. Think about that. There's ETFs out there that promise that because of covered calls. What happens when you try to do a call and the market's dropping, or a short and the market's going up? You sit there and you wait.
You wait and wait and wait, and you put more money into it to keep that bet going so you don't lose everything.
Yeah, and if you're trading on margin, don't ever do that. But if you're trading on margin, you got to pay a fee, because whoever lent you the money to trade is sitting there saying, "No, you got to pay me this much per week or month or whatever the agreement is." But
especially if you extend it, if you do like a week call and you extend it, then you got to pay more money, just so you don't.
More money.
More money, more problems.
That's right.
So Spartacus says, I am thinking about selling NXST and buying more Comcast. What do you think? And he also says, I've been looking into IEP, and apparently this one is worse than that one.
No, I'd say IEP is worse. But
and
here's
he just said Cornerstone Strategic Investment Fund, CLM. This is the same as what you're looking at.
I have to go through it because we just talked about dividend traps, but no. So take a look at Anelli Capital. We have 365 million shares outstanding to 700. So there's twice as many shares outstanding. Their liabilities have doubled. Their operating income is down. So when the stock went up, when we bought at 20%, I'm like, no, I'm out. They got to fix this. Do I think the company's going to work? No. I mean, if you can hang on to them for a long time, you'd probably be fine. But yeah. They got to fix this. When those chickens come home to roost, I'll be waiting. But right now, I don't want to. And like I said, they're mid cap now. They weren't mid cap back in 2006. They're still, the enterprise value is still massive. It's the largest mortgage-backed security company in the United States. They're going to be fine because of that. But this is where oftentimes you see the retail investors and what they call the smart money and the dumb money, where like the people who buy this only look at the dividend. They only look at the profit sharing. And remember, you don't want that dividend to come from things like selling assets or issuing shares or like equity. You want it to come from actual profits. And right now, that's not where it's coming from with this one. And if we look at IEP, before I get on that bandwagon, let's get on this bandwagon. What do the rest of you? Oh, that's Brian. Hi, Brian. I'll respond to Brian's chat.
Matt said, just for the conversation's sake, what are your thoughts on DJT stock?
Oh boy, Mr. Trump. Nobody buys stock like Donald Trump buys stock. He's better than Pelosi. Only the best people buy the stock from the best
it's
people.
It's the best. My stock is gold. It's gold stock.
They're such beautiful, beautiful ticker symbols.
Oh, I can.
There you go. Hey, Spartacus. Look at that. How'd you like that for your dividend check? I saw we have a Seeking Alpha partnership. I got to get the link back up because it broke and the guys are working with us on it. But IEP, they had a scathing article on the management for this one, and it was quickly subdued. So I'm hoping that doesn't happen to us someday. But they were saying that, like, look at the payout ratio. They're not profitable, so what are they going to pay out if they're not profitable? And they can't cover the dividends. So that means, like, they could pay it, but it was 3 quarters ago. They can't pay it at all. So what are they doing? How are they paying this huge dividend check? Well, they're not. I mean, look how much this is going down. What they're actually doing is they're issuing shares in IEP. This is way worse than Anali Capital because Anali Capital has they're the largest MBS company in the United States. So they have a product. They have actual, like, they have a defensive mode. They're not going anywhere. These guys don't have as much as that. So if you go and you look at the financials here, and we look at the shares outstanding, you're going to see quite the story. There we go. So I hate when they do this. Well, I'll just make it simple. Total common shares outstanding, 293 to 637. This is people buying the stock to pay the people who already have the stock so you get your dividend check. Just like Anali Capital, I'll be waiting for when this becomes Sanity Town again because their total revenue is also dropping. When it becomes Sanity Town again, sure, we'll look at buying them. They look great. But right now, the bookkeeper, the accountant inside of town, which I am an accountant too, I have to do my books for my company, and I've done it for the past 8 years. So, like, this, I see stories in these numbers. They're so beautiful stories. Nobody tells stories like Tom tells stories. They're the best stories by the best people. And Brian's beautiful hair. That's why he wears a hat. But no, this is like look at the net income numbers. You don't want to get a dividend check from somebody who's not making money. If I was the ownership, remember, you're given the company a loan. You buy a share of the business. You're part owner in the business. Would you really, as the owner of the company, want to take equity out of your business that's not making money to pay for whatever it is that you want? How long do you think the business is going to exist? They're just not. I wouldn't want them to pay me a dividend. No, and now an REIT is a little different. They kind of have to. But this is there's your man. I got another. I have two. This is soapbox number 2.
That's 2. Yeah.
Soapbox number 2. I'm sorry. There's a net change in cash. Not a good one. Not right now. Not yet. Maybe later.
It's not great.
Not great. What do we want to do next? Procter and Gamble, or go back to the stock screener?
DJT, just he's talking about Truth Social and Truth Media Plus, Donald Trump's little thing. I'm betting on Rumble. It's not that that's a bad thing because they are for free speech, and look at Market Edge is long on them.
Well, YouTube will tell you they're about free speech too. Here we go. Beep, beep, beep. There's my thesis. There you go. I didn't even have to say words. I just made noises. No, I don't know. So here's what I'd look at with a social media platform. Truth Social user count 2026. Are they increasing? This is what we're looking at for Rumble as well. Now, I know
you got to have users. You got to have advertisers. That's how you get your money.
Do we think so? They've got 6.3 million users, and the app cut. So this is a bad sign. Without even looking at the stock, I think they, as a business, now I'd love to see companies succeed. But right now, with 6.3 million users and dwindling, I think I would want to see that number change before I even looked at whether or not that's a good company to buy. I don't even need to look at anything else with this. Do I have problems with Trump or Biden or anything? I said, honestly, I think it's part of the whole big same system. So, just like the media, you never really get the full story. But this isn't like I don't like Trump, because I
No,
think
I would like to see this and Rumble like merge, but I don't think Trump would ever do that because he'd want to be the owner.
no, and he'd want to make sure he makes the money on the shares that he has.
Yeah. But maybe if it gets too bad, he'd sell it. He'd sell it to Rumble.
Matt says they're in a partnership with Rumble to use their servers. That is interesting. Are they really? Are they? Let's see if AI says it. In a partner. I can't see, the camera's in the way. Can I spell?
And
Yeah, partnership.
are they in a part?
Rumble. Oh, now it's going to make me do the full thing. I don't know if we should. Yes, they are. Oh, Matt, you got some knowledge. Dropping the knowledge on us.
Mr. Rumble over here.
That could be good for Rumble.
I could.
That could be good. Maybe they would. Maybe they could merge, because that would be good for both. I hope they
Have
do.
some sort of sharing where you could go between the accounts, between Rumble and True Social, or see both on the same screen or something. That would be neat.
Look at their historical earnings. Oh, that's terrible. That's almost as bad as Rumble.
Yeah, but they beat them every single quarter.
Everybody's thinking, nope, nothing, but they're actually reporting. Now, the problem with it's the same thing with Oracle stock, is that you got to buy like servers and very expensive networking equipment, and that stuff only lasts 5 to 8 years.
Or rent them from a data center.
Yeah, I think let's look at their total income here. Total revenue.
3 million.
1 point. Wait a minute. My company's bigger than this. My company's bigger than Donald Trump's media company back in 22. That makes me feel better. But then they like doubling eclipsed me after that. How about that? I feel like a big cheese now. I'll be bankrupt tomorrow. No, I'm kidding. I won't be. Well, we got good people. Oh my gosh, look at that. 20 times the operating expenses. That's not a good thing. So when they went public, they needed to raise capital to scale. And now you can see what happens with that capital, because now they got to spend stuff. There's their operating expenses to grow the operation. The real question is now, will they survive, and will all that investment actually work out? It could. They got to get the user adoption there, though. Facebook has scale. These guys do not yet. And I'm constantly surprised how much money Mark Zuckerberg's able to spend on just his little pet projects, and nobody seems to care from the stock's point of view. It's like, we did this AI thing, and we created a super intelligence that tried to kill all the world's puppies accidentally, and it cost us $500 gazillion. Oh, okay. But what? I can't even lose like $20 before somebody complains. Like, hey, you went to IHOP. You took that guy to IHOP for lunch. You're too expensive. We might fire you. It's like, oh my goodness. I don't even have an office, people.
If you could afford that, you can afford to get charged less.
Yeah, it's like, I'm already like a shoestring budget. Come on, man. Let's talk like Biden for a minute. Net change of cash. I don't know. I think let's watch the user adoption rates on these guys. Let's see what happens with that. Let's see what happens. They have some ambitions of putting together a streaming app of some. Of course they do. Everybody's going to do what everybody else wants to do, and whoever will get on top will be the one that gets the most investor equity. Not necessarily the most users, it's whoever gets the most funding. It's an equity war right now. Like the Industrial Revolution, but for social media. Everybody wants a piece of Facebook's pie. Rumble too. And YouTube.
I do too.
Let's see. So we could do the screener. I think Brian should read about Rand Paul and Procter & Gamble when he comes back. Because Procter & Gamble, we own Procter & Gamble. So they're going to acquire Thorne for $3.8 billion.
I don't know what to think about this because I use Thorne products. I use their creatine. Yeah. And I've done a lot of research on them, and they do pretty good with clean materials and making sure that the equipment that they use to manufacture it is cleaned out so that there aren't other things that find their way into their supplements. So,
like MSG?
Or whatever they made before that, right? Because you got a mixers that you put in, I don't know,
Brian's gonna
Some
find out like there was
some sort of
Vicodin or something
protein
in
powders. Yeah. Some sort of protein or I don't know, some seed oil or whatever, and then they do a creatine after that, and they don't clean it out enough, so now you got a little bit of seed oil in there mixed in. It's a
Brian
problem.
finds Brian finds out that the mixed product is like melatonin or something. He's like, man, I feel good, but I'm so sleepy afterwards.
Yeah. So I'm hoping Procter and Gamble continues the trend of quality assurance, I guess.
Okay, I gotta empty my tiny little bladder, but I sent you the link. I think people should know this because we have Procter and Gamble stock, and I want to take a look at their earnings to see what this $4 billion will do to them. Because right now, over the past year, they're kind of flat, like down 5%. But if you look at them over 5 years, also flat. If you look at them over 3 years, not doing too good. A company like this is a pretty good indication of what the economy, or at least what we think the economy is going to be doing. So I want to pay attention to that because of the products that they make, and pay attention to, because obviously we're investors in it, to see what that might do to their liabilities and how it might affect their income. So I will let Brian take it away. I will be right back to nerd rage and bomb and talk for hours on end.
Okay. Procter and Gamble is buying supplement brand Thorne for $3.8 billion. CEO Shailesh, I'm not even gonna try, said on CNBC's Squawk on the Street. I'm gonna move this over so I could read it better. The acquisition, which is set to be announced Tuesday, is a bid for Procter & Gamble to grow its health and wellness division. The consumer goods giant already owns several other supplement brands like Metamucil, Align Probiotic, and New Chapter Vitamins, which are housed within a broader healthcare division that includes Oral-B and Vicks. We are really happy with the asset itself. Jajurikar, maybe that's it, Jajurikar, told CNBC's Sarah Eisen. It's a really well-run operation, and it's been around for a long time. Thorne was founded in 1984 and went public in 2021 at a valuation of $525 million. L. Catterton then took the company private in 2023 in a deal valued at $680 million. Its annual revenue surpassed $500 million in 2025, according to Thorne. Thorne CEO Colin Watts told CNBC earlier this year that it had the potential to become a billion-dollar brand within the next few years. The majority of Thorne's revenue comes from shoppers under the age of 40. The supplement brand has also been a surge in direct-to-consumer sales. In recent years, vitamins and supplements have grown in popularity as consumers look to them to improve every aspect of their life, for everything from sleep to energy levels. The Make America Healthy Again movement, led by Health and Human Resources Secretary Robert F. Kennedy Jr., has also leaned into supplements. Kennedy himself has said he takes so many vitamins he can't remember them all.
Oh my goodness.
Procter & Gamble is the
What?
latest consumer giant to buy a buzzy upstart in a bid to profit from the trend. Early this year, Unilever bought Groons, a gummy supplement brand.
I've heard of them.
I've heard of them. Thorne will be a small piece of Procter & Gamble's broader portfolio, but the deal demonstrates the company's broader aim of owning relevant premium brands that appeal to younger customers. In Procter & Gamble's latest quarter, its volume was flat, leading to worse than expected revenue. Its healthcare segment was worst performer based on volume. Shares of Procter & Gamble were trading up less than 1% in the morning trading on Tuesday.
Okay.
Here is my thoughts on this, because I do research in a lot of supplements, and I'm getting older. And one thing that really strikes me as the food quality in America, while we have an abundance of food, has gone down over the last 50 years, right? The things that we eat are processed and not necessarily as good. And we're coming to that conclusion that, okay, so now we have a food epidemic where our food quality and the sustenance that we get from it is not as good as it used to be. So now we got all these supplements. Let's fix the food, maybe. Fix the food that we eat so you don't need the supplements. I think that's the argument. And I think that's where people are kind of arguing about, like, we need better food. Like, instead of just eating properly or eating right, which is arguably more expensive, let's just take a magic pill that fixes everything.
One that
Right?
could harm you if you're not careful. Like the Kennedy thing. I take so many vitamins, I don't even know what they are. I was like, really? How many of those vitamins are fat soluble and how many are not? Like, do you know what your pancreas and your liver and your kidneys are doing? What they might be screaming for mercy.
Well, not only that, your body is tuned to creating a lot of these minerals and vitamins and stuff that you need during the day, right? So it creates it takes the food you eat, it processes it, it sends it to mitochondria, it sends the oxygen to wherever it needs to go. It gains energy from it just to produce all the things, the serotonin, the melatonin, all the things that you need to operate efficiently during the day. So once you start taking all these supplements, your body isn't making those anymore, right? So you're supplementing the functions that your body does, and so it doesn't need to make as much. And so now you're probably going to find out that your body is getting harmed because of these supplements, because now it's depending on you actually consuming the thing that it usually made. Now, if
Right.
you're in a deficit, like your body doesn't create it, that's one thing. But if you're just trying to do longevity or performance or whatever, you might be doing more harm than good.
For me, it's hair and muscles. Not creating enough of it or there either. No matter what I do, can't win, Brian. I'm trying, but
Well, you need red light therapy for your hair.
Does that even work? Does
Yep.
that really actually work?
the
Anybody done
thing.
that? Does that actually
Yeah.
work? Matt says we have food in the sense that you can swallow it and pass it through your body without dying. We have very little real food. We have an abundance of food and a shortage of nutrition. That is very true. One of the guys in my company is a good friend of mine too. I've known him. Everybody in my company, we've known each other for like 15, 20 years. He had Burger King for the first time in like a year this week. And the very next night and the whole day, he was throwing up the whole day. Like he couldn't make it to the next customer, so I had to like do musical people for a while just to make sure that we were actually taking care of our customers. But he's like, I am never doing Burger King again. It's like that says something if you've been eating healthy and you go to the typical fast food that everybody else normally eats and you try this. I don't know. He says loves his Whopper, and I'm not picking on Burger King. It's like all fast food, Taco Bell, Wendy's, McDonald's. You can name any one of them. Like Matt says, there's food, but there's no nutrition, and your body like it doesn't know what to do with this like fake cheese. It's basically plastic that you put in your stomach. So I felt bad for him. I was like, why did you have Burger King? He goes, I don't know. It's like, but of all the places you could eat, you could eat Burger King. The sad thing too is like people think that, I'm going to go to a restaurant, I'm going to get something different. Well, if you look at like Gordon Food Service and where all the supply chain comes from, it's all coming from the same places. Like just because you're a local mom and pop shop, unless you're sourcing the beef or something from a local farmer, it's coming from one of the big three manufacturers of food out there. So it's not that different. It's preparation.
Chicken's
matters.
probably coming from Tyson or what's the city? It's a city name. I can't remember the other one. But yeah, there's, like you said, there's probably 5 or 6 major companies that manufacture most of our food, really, when it comes right down to it. So even like if you got Cisco, not the electronic Cisco, but the food SI Cisco, and Gordon Foods, they source a lot of their products from the same suppliers.
Yeah.
So even though you're buying it from one or the other, it's still a lot of the same suppliers. So yeah, it's hard when it comes to food. If you don't grow your own, you really got to do a lot of research to figure out where it's coming from. And then you get things like the whole lettuce problem that we're having. And it's Taco Bell, but it's not just Taco Bell. So
some of the people say, well, they blame the food industry. So I'm not sure that's the proper way to do it. I think you've got to talk about the economies of scale. Nobody wants to see, like, I think it was, I don't remember which report it was. I don't know if it was the World Health Organization or if it was American Red Cross or Compassion International. Like one of these companies, I read a lot of reports, came out and said like 1.3 million children are going to die of starvation this year. That's horrible. Some of it's due to like the country they're in. Some of it's political corruption. Some of it's due to genocide and all the crazy things going on in other countries. But like, as a food producer, we waste a lot of food in the United States, but like nobody wants to see that happen. Like nobody wants to see starvation. So we produce all this food. But when you talk about economies of scale and you got to feed 8 billion people beef or lettuce, like how are you going to scale that out? So if you have this massive farm or ranch, let's say you've got millions of cows that all fart methane that contribute to global warming. So let's get on that beef for a minute. But like, if you have this, and then you got a local mom and pop thing, the economies of scale take over where all of that beef can come in at a lower price per pound, whereas the mom and pop shop that does things like the traditional way costs 3 or 4 times as much. Now, if you're a regular person and you're making the, what is it, like 63,000 is the average like individual income now, you're not going to want to spend 3 times the amount for your beef. So that's how this stuff wins out. It's like, well, yeah, that's the problem is scale. It's not necessarily like, well, this is all evil. It's just, well, you know, McDonald's, think about how much beef they got to order every day.
It's the cheaper value option,
Yep.
right? I'm totally with you right there. People go to McDonald's because it's the cheaper thing. Everybody would, if you could get the healthier option, if you could get the natural option for the same price as McDonald's, everybody would be eating that, right? It's just because you can't spend $20 necessarily on your lunch, whereas you could spend $12 at McDonald's.
I will say this, because I've got kids and they like to eat everything. We get our beef from local farmers, and I was able to get a half a cow for like $1.98 per pound, and that's any cut that we wanted. I mean, it's half a cow, so you can't get like 25 filet mignons.
Right.
Yeah, there's only so much cow, but like that was, I was showing somebody the receipts, like, you paid $400 for that? That's incredibly cheap. Says, yeah. But you like by the time you get that, so we're picking this up. But think about that, like the butcher had to do all the things that they do, but that was on one order. If you take it and you pack it individually to a place like Walmart or where like Sam's Club or Costco, they don't know who's going to buy what or where, so they have to do it based on demand. So the packaging, the disbursement of all that costs money. So you're paying the difference between the two. And I often find that like you need a good chest freezer, you need that, but you can save. If you want to talk about saving money, that is an amazing way to save like hundreds of dollars a month if you just source it there. But it does take a lot more legwork. You can't just go to the store and like, ooh, buy me that.
People don't see that too, because you mentioned that you spent $400 on that. Wow, that's a great deal because it's $1.50 a pound, where it's $10 a pound at Costco maybe.
Yep. Filled up a chest freezer, 7-foot one.
I think if you have a chest freezer, right?
That's where I keep the dead bodies.
One thing you're missing the point on, the dead bodies, yeah. One thing you're missing the point on, most people would see that and said, you spent $400? Who has that kind of money to spend on food
people
all
who
at
invest.
once? Right, that's my $400 I have left over that you want me to invest a month. So that upfront is a lot of money for a lot of people to spend.
If you think that way, if that's how you're thinking, then you probably shouldn't buy stocks. That would be my advice. I invested money when I had $100 to my name, living inside of a Geo Metro, making $5.15 an hour, grinding metal in a brake press factory for Hannock Metal. That's the thing where you watch the M&M movie. They're like up, down, and then it comes down, and then you grease. I did that.
But I got a $2,500 iPhone Ultra to buy in September, so I can't be buying $400 worth of food. I need that phone.
It says Obama phone on it.
You got me my Obama phone.
That gets me. The fact that when they finally put her on national TV, she's like all polished and sounds super intelligent. Like, who was the lady that was like, Obama phone? I have a Obama phone. Like, what happened to you? What were you drinking something? Like, what's going on? No, I think, yes, it's expensive.
Priorities, man. It comes down to priorities.
It really does, because like when you think about that, let's look at. You mean to tell me if I'm going to buy AT&T or Procter and Gamble? Let's look at Procter and Gamble. Let's do that example. The same thing for beef, but let's do it. So think about how much. I think it was like 250 pounds or something. It was a ton of meat. Actually, I don't remember. It was over 250 pounds. My wife will know the exact amount and how many cuts they were and what it was per pound and what that specific little chunk looked like. I can't do that. But like if you take Procter and Gamble, so let's look at them and say, I want to buy this stock. They pay they pay a dividend. There we go, 3% dividend. So I'm going to give them $1,000. So that iPhone that you wanted to buy, I'm going to give them $1,000. They're going to pay me on an annual basis, 3%. So I'm going to make about $2.50 every month from that $1,000. You still get your principal back, so you could sell it and get your money back. And this is something where some people miss things. Dividend checks themselves, on average, grow between 9 and 12% per year, depending upon what it is. And you can see that play out here in this particular stock that we're looking at.
Yeah, but that would take, using those dividends, it would take me 100 years to buy that iPhone.
I don't know. Our portfolio, you could buy an iPhone with that, with the dividend checks that we're getting. So here you go.
What we're getting, yeah, but what you're talking about is $2 and something cents a month, $24 a year. If it's a $2,500 iPhone, it'll take me 100 years to buy that thing.
And that's the difference in mindset. You have to plant the seed. That's a good point, right. Brian. Like that's what I think you're trying to attack is the whole mindset of like, well, why would I give up what I could have today for something tomorrow? Because this is what happens. If you go and you look at Procter and Gamble over the course of, let's do that. Let's say 20 years. Let's go back to 2006.
Razor Core, you nailed Tom.
When I was your age, I invested uphill in both ways. And so gosh darn it, that's right.
He is a 70-year-old man in a 40-year-old body.
Back in my day, we traded the pink slips like this.
They were actually pink.
They were actually pink because I got fired from my McDonald's job.
That's why we call them pink slips.
And I had my metronome from my ticker symbol, and every so often I just had to push it, and it would go over there, and I would watch it come back, and that was called the level 2 tape.
And we didn't have anything to entertain ourselves like PlayStations and Nintendos. We had to throw rocks and sticks at each other, and it was fun until we're bloody.
And I still do that to the UPS workers.
We used to jump off hills.
Like secondhand lions.
Land on our asses until our spine shots through our brains. But it was fun, and we liked it. We loved it.
There's a generational divide for you. Let's go back to 2006 for Procter & Gamble. So 31 cents a share in dividend checks. Let's go back to 2014, 64 cents. They have doubled. Your $2.50 is now $5 every month. Oh, and then they split. So 1-to-1. So now you're
doubled
$10 roughly, right? Did they keep that the same? They did keep it the same. Look at that. Look at all those dividends. So that is $10. Now we're gonna go up to, what was that? What was it 67 cents? Okay, so $10. I need an easier number. Give me an easier number. Come on, guys. Go to 1. We're at 1. Okay, so what was it? 67, so 40%. So now you're $14 a month, and you're just about $15-16 a month. Now you can do the calculator math, and you can go, Tom, you're wrong. It's actually $11. Or no, it's probably more like $20, and I'm being stupid. But
it's
like
$15.72.
But this is if you bought the share of Procter & Gamble, the current stock we're looking at. Like, we look at any one of the stocks. But like, this is just them.
And you didn't add to it along the way.
No, I didn't. You're right. Like you bought one
and just held it.
$1,000 and just held it. So if you had $1,000 of Procter & Gamble, you just sat it there and you spent every single dividend check you ever made. You went from $2.50 a month roughly to what is now like $15. Now that's not exactly what it is. Their dividend yield was different back then, but and I get all that. But that's the concept here. Now I can pull up like so many other examples, not just one to show you. So think about that iPhone again for a minute.
And that's over 18 years.
Yes. Think about that, like $2,000 purchase. Think about just like the beef. So every time that person goes to Costco or Sam's Club and they're spending $10 or $8, I don't know what it is now, like $8 a pound of beef. I paid $2.
Yep.
Every time they do it. It's always harder in the beginning. Later on, it's easy. It gets
As
so
Matt
much
said,
easier.
this is just delayed gratification. People should explore that more often in their lives.
I worked hard in the rock quarry for Mr. Slate operating a Brontosaurus crane. Actually, that's Flintstones.
Yeah, it was. You're just quoting Flintstones.
I said Flintstones. Let's look at our dividends. Let's do that. Because if we
could
went from
every
2,
month we could buy a half a cow.
we could. I don't know what I'd do with it, but
You would be fat, very fat.
I'd walk around to the neighborhood block party, and you need some beef, and you need some
Yep.
beef.
I got way too much beef. This is just free cow for everybody every month.
You walk into a bar. You got a beef with me? Yes, I do. Have some beef. This one's chuck. This is sirloin. This one's rib roast. This one's T-bone.
I just keep the 5 filet mignons I get from each package and then give the rest away.
But think
Why
about
don't you
that.
just buy the filet? You could do that.
It's only been 4 years. We're at $382. So let's take that out. 1 year, $410. Year
Okay,
2,
here's the
$450.
thing. Look at this. So in 4 years, we've managed to do this. We got an estimated income of $4,500 a year. We could buy 2 iPhones every year with that. Almost. But
that's the mindset.
Not the ultras, but we could do a Pro Max. We could do 2 Pro Maxes that are maxed out with RAM and memory.
This is where Brian says the Pro Maxes will cost you your soul.
That's in the terms. That's all.
It's only in the terms. Your soul is now ours. All of your marketing to you are now the product.
Did you see The Simpsons? Have you ever seen the movie The Centipede, or heard about it?
Heard about it, didn't see it.
Where this guy, like doctor, kidnaps these people and sews their mouths to the ass of the next person, so that when they eat, it goes through their digestive systems. So the first person shits it out to the next person, then it goes through. It's a weird movie.
Why do you watch this stuff? Like what?
I haven't. Really want to watch the whole thing. It was just a weird indie movie.
So like,
but the Simpsons, it was big like 10, 15 years ago. But not the Simpsons, South Park did one where in the iPhone, or maybe his iTunes terms of agreement, it has that in there where you could do whatever you want with you. And so like Stan gets taken and like ends up being part of this human centipede that Steve Jobs has put together because he agreed to the terms of agreement. It's like, nobody reads those. You got to read the terms of agreement.
Wow. So, first of all, the second person in line would get sepsis and die almost immediately.
No, you're overthinking it.
So Matt,
he figured that out.
It was Warren Buffett that said that. So he said you can't have blankety blank with 9 women expect to get a baby in 1 month. Now I would like to do that, except my wife would probably kill me, and then the other 8 would also kill me. And how did Solomon do that? He had like 1,000. It's insane to me. Anyways, it was the Human Centipede, and it was South Park. It was South Park?
I said South Park.
Oh, you did?
I said Simpsons first, but I corrected myself to South Park.
I was still like brain blue screening on like, why is Brian watching this? It was crazy.
It's fun. I watch all sorts of things, man. I don't discriminate. I watched Robot Jocks, for God's sake.
Oh yeah, I watched Goku.
Terrible movie, but it was funny.
70 episodes of yelling. Procter & Gamble. So I didn't do the one thing I wanted to do before we moved on. It was financials. We wanted to look at their income. So a couple things. What did it say there was? There was 500 million. Operating income, 5.48 million. Look how small their margin is. That's where Procter & Gamble's going to come in with scale and change that. That's why they bought them, I would imagine. EBITDA, 24.5 million. Okay. I don't know if that's accurate. It's AI. I might think it's accurate, but then it hallucinates too. Watch, it'll be more accurate than us a year from now. We'll be completely obsolete. Total assets.
Yeah, Razor Core. Ironically, Robot Jocks gets better with mass quantities of vodka.
This is why Brian's man cave is in the basement and his wife never comes down there.
And you got to have like-minded friends to rip on it the entire time.
Total shares outstanding.
I'm very impressed that you know that. That's an obscure reference to a movie, man.
All nerds think alike. I'm with you. Okay, so what is that? They haven't reported it yet. Okay, so this is not a 6:30. Okay, they just haven't put it in here. Well, that's silly. That doesn't tell me what I want to know. Well, okay.
I like all the dashes though, the non-reports.
So if we look at their liabilities, if we look at Thorne's liabilities, what is I'm typing blind. Oh, I spelled it right. Hey, how about that? 120. Oh, so this is nothing. These are not going to affect hardly anything.
Oh, Procter and Gamble? No.
No. So this is a strategic
These numbers
move.
are very small percentage.
Yeah, I wouldn't put this one as a negative thing for Procter & Gamble. In fact, I'd put this as a positive and a market share. They're aiming for market share. Good for them.
They're getting into the supplement, the young supplement crowd.
That industry scares me now. There's so many, like if you talk to a nurse or a hospital and you say how many people are you getting coming in now because they're taking too many vitamins, that has spiked. I think I read a report that says over 400 to 500% increase in just like, I'm even one of them. I had to, from the pancreas thing with vitamin D. Like that's, that industry is dangerous. That's, profitable though. Holy cow. I'm glad the United States is like finally figuring out that maybe we shouldn't eat Wendy's every day. But, you know.
We've known that for 20 years now. Come on.
What was your sign? Well, the sign was when My 900-Pound Life came out. Like, that was your sign. And they show them spread out over the bed, and there's like all these fast food wrappers everywhere. It's like, that's disgusting. Like, why would you I don't know. It's like the hoarder show. It's like, why would you live in that? Oh man. So yeah. So the financing and investing activities, that's where Thorne is going to show up. And here's the interesting part about that. Thorne's a $4 billion company. That's what they're buying him for. Doesn't really make much of a dent. If none of the other, so like worst case scenario, I would say maybe this will go to 8 instead of 4.4, but it could put some negative pressure on them for a little bit, but that's a profitable business and their cash flow, they would be down on cash flow. I think I would wait a little bit on Procter & Gamble. Maybe let them get the report out, get the two quarters of investments to see what Thorne does, and then potentially buy them. So I would put these on my watch list for maybe this winter. After the economy crashes and our 20% per year becomes negative 500% per year. Okay. Do you want to talk about Rand Paul?
Sure.
All right, so I did not actually watch the hearing. Brian actually watched the hearing, so this is not related to stocks as much as it is Pfizer. No, this is something else. This is related to everything that happened in 2020. So it's every once in a while on our stream, we'll talk stocks. If you got a stock symbol, put it in there. We'll squirrel for 5 hours on it. Thank you, Spartacus, for doing that to us. We have every once in a while we'll come up with some articles that think, oh, that's interesting. Kind of like the Penguin one last week. There's a couple other ones here. So the Cuba and Spain. Cuba's interesting because of the Venezuela oil thing. Spain is interesting because who sent them there. But this Rand Paul thing was really interesting. So was this the article, or was your view different than what this article talks about?
I actually watched the C-SPAN vote and arguments. It was kind of interesting to watch for his refusal to testify. I think this.
So
I
what
haven't
happened?
read this whole article. Let me see if this actually says it. So
All
what
right.
happened was Rand Paul and hang on. So Robot Wars, I don't think was a direct sequel to Robot Checks. I think it's just the same genre of terrible robot movies back in the early '90s. Anyway, so what happened was they had the going back to the Fauci hearing, and he wouldn't answer any question. It was just basically the Republicans trying to get answers out of him and possibly trap him in a way where they could send him to jail. The Democrats were trying to protect him, but both sides of this committee decided that they want him to answer questions, what went wrong, what went great. That's the basic idea of having him back to answer these questions. Well, he took the fifth because he saw it as a trap, and his lawyer saw it as a trap, and
Yeah.
he wouldn't answer any questions, even mundane, like what's the color of your tie, or we watched a video last week. So this
111
time,
times too, I think, wasn't it?
which is fine. I mean, you can declare the fifth, right, and not persecute yourself. But what they decided was, okay, you can't really declare the fifth on this because you have immunity. Like there's no risk of you going to jail because you got a carpet immunity on this subject. So unless you lie or say something other than what is the topic of this conversation, you're fine. And like saying what the color of your tie is doesn't affect you either. There's no perjury, right? So that's what they're trying to get him on. Like, you should answer the questions because there were no risk of you perjuring yourself or going to jail. The Democrats disagreed, and they had a vote of whether or not to send him to the DOJ to have some sort of prosecution. And I think the Democrats of the committee were more. So it came out to be like 8-5 in favor of tabling the conversation. So at the end, it was more, they decided, okay, let's table the conversation so that we can have the lawyer in there so that we could give him guarantees that no matter what he says here, he can't be prosecuted.
I think it's plead, Matt. I'm looking at QSR, by the way.
Plead the fifth, yeah.
Yeah, and interestingly enough,
fifth.
Burger King's in here, so that's very clever of you. I like some of their other brands, but keep going, Brian. Sorry.
If you want to be technical, Matt, plead the fifth. I invoke the fifth. But yeah, so plead the fifth. So I think what's happening right now is they are sending it to a committee to redo the whole thing to give him guarantees that there won't be any prosecution for anything he says, so that he can answer the questions. He still can't lie, but at least
can't lie.
he could be truthful and hopefully
Jim Carrey.
Yeah. Liar, liar.
Yeah.
I hold myself in contempt. But yeah, that's basically the gist of it. I think they were trying to trap him. Honestly, I think they're trying to get him to. They're gonna direct the questions in the way that he has to say something that he did wrong, and he's gonna lie about that to make himself look good. And they're gonna say, "You lied. Now you're perjuring. We're gonna send you to jail."
So in Fauci's defense, when he said that, like, when we watched that last week, he said that, like, the only reason why I'm here is because you guys want to put me behind bars. Like, that's the only, you just want me to say something to put me behind bars.
I think that was pretty truthful. I think they did.
Like, that's man, I would not want his job or to be in his position, because every decision you make, it's kind of like, why would somebody want to be a politician if not for power and glory? Because, like, everything you do is going to be analyzed. Your farts are analyzed,
scrutinized, and
your
you know
socks
what?
are analyzed.
I think he needs to answer these questions. There's a
He does.
lot that needs to be answered for, and even if he doesn't go to jail, I don't care. Come out and say the things that were wrong, so we don't do it again. Right? Let's not
Exactly.
make the same mistakes. If there's another pandemic, let's not all wear masks that don't help you. Right? It's psychological more than it is scientific, and medical helps, right? So come out and say it all. Say whatever it is you did wrong. But his ego is so large that it's not going to happen.
It's not as big as mine.
And that's why he needs to go to jail.
So total revenues, QSR, no. Answer is no. Look at that. Unless I'm going the wrong way. Let me make sure I'm going the right way. Yeah, no, I'm going the right way. The answer is no. So 2025, 2026, total revenues. Oh, never mind. Never mind. I'm okay. Okay. We're all right. No, they made more money.
Be the fifth you want to see in the world.
May the 5th, May the 4th.
Inside the
I don't
5th.
know, something. It's a bunch of Star Wars things going
Revenge
on.
of the Fifth.
No, QSR actually, I don't know about no is the right way to put it. They're actually doing pretty good. So despite all this make America healthy again, it ain't working. People are still
it's
buying
not.
Taco Bell.
A lot of people are, right? They're not doing terrible.
If you thi-
Chipotle and Qdoba and all them.
If you think about it, though, it makes sense because, like, if you buy like a bag of potato chips or something like that versus buying something that's healthy, right? Like the healthy label they talked about, it's actually more expensive to eat healthy than it is to eat junk food.
It is. Yeah.
And if you don't have a lot of
Absolutely
money
is.
left over, then there you go. Which is really sad. I mean, that's super. So they did I saw an article. I think it was. I can't think of the name of it now. I'm getting old. I'm forgetting what the company was, but they distribute food for across the world for hungry families, and they were showing like this is what people eat in Greece. This is what they eat in Italy, and Italy shows like all this natural stuff, and they showed this is the United States, and the guy has a pizza box and like fast food and a Coca-Cola, and everything on the other countries, all the other countries showed like potatoes and sour, like they actually showed like real food, like lettuce and
or just
tomatoes.
the Mediterranean diet or the Asian diet are supposed to
Yeah.
be two of the best diets that you could get on, right? The healthiest foods.
And there was none of that in the United States showcase. Like it was all fast food and just like manufactured stuff. It's like, well, that's the problem. They don't
And
have these problems elsewhere.
it's delicious, right? Fast food is delicious. It's manufactured to be delicious. They spent a lot of research and development to figure out how much sugar to put in a McDonald's burger to make kids love it, but not detract on the taste. You know, it's unfortunate,
It is.
but it was all money. It's all drive by money.
Here's some evidence. I mean, these guys actually don't look that bad.
No,
Despite the fact
McDonald's
that Burger
is
King is in
not
there.
doing terrible.
Yeah, this is McDonald's. People ask me, like, "What would you buy the food industry?" McDonald's, like, McDonald's is not a food company. What? They're a real estate company. Huh? Like this, they got they got most real estate, like almost as much as Bill Gates has. He's got a lot of real estate too.
It used to be 7-Eleven, but they've cut down a lot. And
They have.
Starbucks.
Yeah, think about this for fast food. And I do like Tim Hortons and I like Firehouse subs too. So I actually eat Firehouse. But these are 1.8 to 2.2, so they're doing fine.
They're
Where
doing fine.
I'd be a little cautious is disposable income and disposable spending versus like eating PB&J. Those are the first things to go. First, it's like RVs, recreational vehicles, wave runners, things like that.
PB&Js aren't good for you either, though.
No, but they're cheap.
It's cheap. Yeah.
You know, then you get like vacations and like how many people are like one of the stocks somebody actually asked us to look at or earlier was a leisure and hospitality company. And I think, well, you know, if the economy really is going down, then that would be one of the first industries to also suffer too. And then after that discretionary spending, you see people eating out less. So to understand how that is, the Fed puts out like a beige book. Take a look at that. The government's, Trump's changed some of those reports. You can't see them as well. It's kind of a mess. But like normally, there's reports out there that you can see what the consumers are doing, and the Fed does dictate like some of economic policy based on how those reports are going. So if you want to know whether or not you should buy like leisure or hospitality, what is that? Forest River. What is the RV company that makes like the Rockwood and all of those other ones? I think it's Forest River. Who makes the Rockwood Brew? Who is it? Who makes the Rockwood? Who makes the Rockwood camper? Forest River. I was right. Yeah. Okay. So Forest River. So that's a public company. It's a Berkshire Hathaway company. But take a look at like what those revenues are doing. That'll kind of give you a good idea of the economy. It used to be back in our day when we traded in stocks uphill both ways in the snow.
We had to have an actual paper stock that represented the stock, and if you lost it, you were out all that money.
It used to be like Procter & Gamble, DuPont. Those would be the ones that you would, because they make like shampoos and stuff. Those would be the ones that you would know that the economy is doing bad on, based on like the weirdest metrics. How many women are buying the expensive high margin conditioners and shampoo versus the cheap Suave products from Johnson & Johnson? Like it's like you could literally measure back during all the recessions like how much that's shifted, because the cheaper shampoos they're not as good, but they also have very low margins. So you can see the margin of these business changes based on how the economy is doing. And I don't know if this one's a good one to do, but like if we look at, because DuPont's a different company now than it was 20 years ago, very different. But if we look at like Johnson & Johnson and you're looking at the last 3 years, this does not paint the picture of economic collapse. What we're dealing with is an asset bubble and a demographic issue. That's a very different conversation. But here we have, let's look at their earnings. Not seeing a crash here either. This is why I keep saying the economy is going to go down, and everything I read is like, no, it's not yet.
Nope.
Not yet.
It's still being propped up.
Still, it's a very much a K-shaped economy. I'll give it that. Very much a very weird economy, because in some spaces it's doing great, in other spaces you're half dead and they're poking you with a stick like roadkill. That when the AI bubble starts popping, then you're going to see some reality checks. That's what I hate about the stock market today. Nothing is like easy to understand. It used to be super easy. All the stuff is out the window because of AI. Wonder what they thought during the Industrial Revolution, if that was the same case. What else we got? So we got, I love ramen more than McDonald's. Who makes ramen? Who makes ramen noodles?
Ramen. The guy died just like 10 years ago. The guy who created ramen noodles.
Ramen noodles. Gosh, I can't spell today. It's Nissan Foods? Nissan Foods?
Japan.
Are they public? I don't think they were. And are they public? You squirreled me, Matt. I want to look up ramen noodles now. I'll probably always eat ramen noodles. I'll be worth billions of dollars, and I would just be still eating ramen noodles. Living in the same house in a van down by the river.
Tokyo Stock Exchange. Oh, wait a minute. TNFPDF.
What?
They're over the counter.
OTC. I don't think that's going to show up in Schwab. Where do you see that?
It's right to the left of Yahoo Finance.
Yahoo.
And available over the counter as...
Oh, there it is. Okay, Korea. No, we're not going to be able to see this.
Nope.
Maybe. Let's try this one.
Tokyo.
You want to do the Suzuki one? Which one are we going to do? Let's do Nissan Foods, because that's who made ramen. So I'm going to look at ramen. Here we go. Now, ramen doesn't cost that much. I'd be surprised if they have a large market cap. Yeah, they don't have a large market cap. They're small cap. That's depressing. Oh, and they're having a bad 3 years. Not a lot of volume on this company either. So we can't really trade them. That's too bad. I like ramen noodles. Oh, well. Okay, so that's RBI. Ramen
Lots
noodles.
of salt.
And Rand Paul, do you think for this, do you think he's going to get convicted?
To be continued. I don't think he'll be convicted. I think the Democrats will make sure that he's got some sort of immunity for anything he says.
Our tax dollars hard at work.
He's going to die a decrepit old man. Sad. Everybody hates him.
You're going to die alone in your mom's basement playing World of Warcraft with the Sword of Truth. And
He's
nobody will care.
He'll die in his mansion while he's eating bugs and not owning anything.
I can't imagine. It's like you're making one impossible decision after another, and you're being scrutinized, and nothing you can do is going to be right. Who takes on a burden like that? Who wants to take on a burden like that?
Well, unless you kill 63 million people in the world, like most people will be okay if you make a mistake here and there, right? They'll forgive you.
That whole era was just ridiculous. The internet, I blame the internet for that, honestly. The people, they weren't talking, they were keyboard warrioring behind a screen and like all getting bent out of shape about like the persons in the other room, like, oh, I can't talk to them. That's your wife. You live in the same house. Oh no, I can't do that. Getting into political arguments with each other.
She won't take the shot.
It's I don't know. Here's Cuba for you.
Cuba.
Doesn't that look like a high-end resort villa?
They are, well, they're back in the 50s still.
The one guy who's got money has got the Chevy there, 1950 Chevy.
Yeah. Which would actually go for quite a bit of money here.
I think that's a Chrysler. I don't know. Man, that's a... And notice how few ACs there are. I don't know. Cuba's so that unfortunately with Cuba, the Venezuela was giving them like ridiculously cheap oil because of communist country propping up another communist country. And I would caution people that are trying to vote this way or thinking that socialism works. I would encourage them to study history. Not saying that their line of thinking is horribly wrong. I am saying their line of thinking is horribly wrong. You need to understand what oppressive societies do to the individual. The United States has problems, but it's not this bad. This was a result of corruption and a failed system that punished everyone with only a few people benefiting. And if you haven't been to China, well, go to China. You'll see the same problem.
Well, that's every communist experiment.
Mm-hmm.
Every single one.
But they still have they all have their iPhones.
Well, yeah, you got to have an iPhone.
That's sad, though. I mean, think about how many people are suffering from this. Like, that's just not... I don't know. When people I think before somebody gets into office, they need to visit some of the countries they're advocating for to see what it's actually like and bring it back with some experience. But oftentimes they get thrown into a super PAC or some lobbyist group that's got money and they have to toe the line. If they don't toe the line, they don't get elected.
Yep.
So I don't know.
I would say this: communist works on two conditions. One, it works in small scale. Once you make it a large scale with a lot of people involved, it breaks down. Two, it only works if you have a benevolent, intelligent, compassionate leader that has everybody else's values in mind.
Like Arcturus Minx in StarCraft 2. He was a great leader.
He was a great leader. My God.
Anyways. Yeah.
But, once that guy dies, like the vacuum of power, eventually all governments become corrupt and communism just becomes corrupt sooner. Like really quick.
The people who say this stuff don't understand how the free society and capitalism works. Like, they don't understand this. They don't understand if I switch back to Thinkorswim. I signed out. I can't show people that. Let's go back to this. But basically, they don't they don't understand what happens when you're buying a business. You're buying, like, if I put stock into Johnson & Johnson or Procter & Gamble or even DJT, you're funding Donald Trump's family, or SpaceX. Like, let's look at SpaceX because they've had a rough couple months. You are saying that I believe in your product, your people, what you're trying to do, and how you can benefit society. Now let's look at XYL stock. Let's go here, XYL. All right. This is a machinery company for what? Water infrastructure. Do you need a water treatment facility? Do you want your toilet to flush? Do you like things like that? Do you want people to have drinking water? So when you buy a stock, you're buying a piece of the company. You're giving them money. It actually goes into their bank account, and they get to do something with that. So like all these evil, greedy corporations, yes, there's corruption. All these horrible CEOs, yeah, there's a few, but most of the CEOs I know are relatively, they try to be good stewards of what God gave them. They try to be, most of the ones that I know in this area are actually pretty decent guys. There's a few corrupt bad apples, and yeah, they just like cops, you get good cops and bad cops. But for every bad cop I know about 20 good ones. Like there is corruption. Are people greedy? Yeah, but the fact that the market's so big, we just talked about 10 billion transactions a day for NVIDIA. Like that's crazy. That's a lot of stock. But like the forces of the market eventually will even that stuff out. If the CEO doesn't do what the board tells him to do, he's going to get fired. Is like I said, the political arm of that, the lobbyists where they write the laws to write off taxes, that's where the corruption comes in. That's where they can say, oh, hey, build your data center here. We won't make you pay any taxes. Okay, there's interest there. We'll line our pockets with that. There's a problem with that. But as far as capitalism goes, if you believe in like this being a solution, give them some money, the company will make some money, and you'll both do well. You can't do that in a communistic country.
No,
you can't.
They live under the golden rule. He who has the gold makes the rules.
Yeah, or gets taken from those who make the rules.
And Matt makes a good point. The communism does not work on any scale unless everyone is under it, voluntary, and can leave. Yeah, there has to be a level of freedom, and everybody has to buy into the idea of helping everybody else. If you need a house built, we all get together and we build a house. But anything bigger than a village, that starts to break down.
Man, I know of bad cops. I don't know them personally. I work in government, so I talk to cops like every day. So there you go. I think he did. Don't get me in trouble, guys. I'm fragile.
Look at Matt look at him backtracking.
Yeah, just like Brian in his Viagra statement earlier, and his protein shakes. So that's why you've got 36 children.
I have 2 that I know of.
See, exactly. No, it's as far as like, I wish I could explain this more to people who go off on their tangents. The problem, they go into the education system doesn't teach them about how the financial system actually works. So they come out with these ideals from professors who never actually had a real job in their whole life. They've been studying in a book their whole life. And finally, when they get out in the real world, they think everything is corrupt and evil. Not everything is. Yeah, there are problems. But like, why would you say, for example, Pfizer is this evil, terrible, horrible corporation? Yeah, they've had a lot of problems. But if you didn't have a company researching medical systems and solutions to those medical solutions, you wouldn't even have the ability to take a treatment in the first place. Like, if they didn't exist, what would happen? Or like, what was it, UNH, United Health? They had a lot of problems lately. A lot of problems. The CEO, it's a really sad story what happened to him. But like, all of this, like, if you didn't have medical insurance in the first place, first of all, operations would be a lot cheaper. It's funny, if you ever go to a doctor and you tell them, hey, I don't have insurance, and they give you the cash price, you're like, why is it so cheap? Because there's not this whole industry. There's problems there. Don't get me wrong. Right. But like, you wouldn't have the ability to have the medical care that we have. So you can make capitalism work better by actually investing. That's my whole point. It's like, you can improve it by investing in companies that you believe are being responsible. That's how you fix it. Same thing with political stuff. Like, if you believe there needs to be change, get involved. Don't sit there protesting on the street. Go run for office. Do a local board. Show up in a courthouse and like sign, hey, I want to be a clerk or whatever. Like actually get involved in the system, because if enough people do that, the system will actually change. If you don't believe me, look at the Bernie Sanders movement. And then look what happened to him in the primaries when Clinton won, and Clinton didn't actually win; he won. But like, nobody talks about that.
Even though he didn't win the presidency, some people would say that he won his idealism, because his socialist ideas are starting to spread. You got AOC, you got Mandami, you got Pike, Hassan, you got all these other people, and even Abdul al-Assad in Michigan here, who's going up against Mike Rogers, and he says he's not a DSA per se, but he does have communist ideas. So
That's scary.
That movement that he started is progressing, even though he didn't win. So some would say he's still winning.
So in a country that's not free capitalist, like today, you could say evil corporations, I hate these things, I quit. And you can start your own public company like Deroni. You can make your own stuff. Like Rumble exists because the people at YouTube that were working there said, we don't like where this is going. Let's start our own company. And they have their own company. In a place like China, you can't do that. You can't just be like, oh, I think I'll start. Like the government has to prove it, and if they have interest in other businesses, you're going to get shut down or thrown in prison. Like you can't. That's some things that people don't. They just don't understand it. And to me, it's like, before you go spouting off your mouth, at least get some education, which is really funny for me to say because here I am on social media spouting off my mouth all the time. There is a catch, but like,
we see the irony.
There's some irony there, but like. I wish, and that's kind of why our channel exists, and I don't think it's ever going to go anywhere, because I wish more people understood this. They also understood that, like, why I say when I look at our investment income, I want this income to come from the proceeds of profit, and not from the equity of the business. Because if it comes from the equity of the business, the people at that company are probably losing their jobs. You know, they're closing down shops, they're selling assets. Like, the bad things are happening. You don't want that. You want the company to do well. So when you buy it, this is why I try to look at companies that are value mismatched. They're, you know, like Intel, for example, 3M, AT&T, like all the companies we ever bought, like they were worth more than people thought they were. We bought them, they went up. Some of them we sold, some of them we still hang on to. We still have 3M as an example. But like all of these companies here, like if they do well, the people at those companies do well. So you have to look at it as when Warren Buffett says it's a pretty bad idea to not like to try to go against American ingenuity, like buy American. This is why I'm kind of with him 100%. I'm a card-carrying capitalist just like he is, just because I believe in the ability for people to have the freedom of choice to decide what succeeds and what doesn't. And that, in a way, is a good way to fight capitalistic corruption. But also, if you become big enough, this is also where like you get antitrust lawsuits with Microsoft and the Mag 7 stocks. Like, so there's no, make no mistake. I agree. Yeah, there are problems. But if you go somewhere else, what are you going to get? You're not going to get the same things. This is where people say things like, this is my third soapbox today. This is where people say things like, you know, oh, the dollar's going away and crypto's going to fix it and crypto's going to like do it. It's like, look, first of all, no sovereign government's going to they're not going to let that currency that they use to function as a government get replaced by something that they can't regulate, first of all. Secondly, if you look at the currency state of other countries, China's the second largest like GDP. So like if you look at them and you look at Japan, you look at all these other countries, look at the problems they have. Don't just compare it through the lens of the United States dollar. Compare it to like what the rest of the world is doing. They have big problems. We have problems too, but I don't think the American dollar is going anywhere anytime soon. India, the BRICS countries, they could play a part, but I don't think they're going to, I mean, they're not going to overtake it anytime soon. And as long as we stop printing a ridiculous amount of money that we are, people will have faith that the American economy will do okay. And here's one problem I have. There's one problem. Tom's computer chair is made out of a soapbox. It is, isn't it? It's got a little cushy thing from Purple. Sorry. But like, they talk about United States being this horrible country and like, okay, out of 190 some odd countries out there, we give aid, trillions of dollars to 177 of them. Think about that for a minute. Food, financial assistance, like munitions to Ukraine. Like there's a lot of things that we do. What if that just stopped? What if we said, nah, we're not going to ship food over to Kenya or Nairobi or anything like that. We're just going to stop. Somalia, you're on your own. Boko Haram, we don't care. Israel, we don't care about you guys. Ukraine, Russian steamroll you. Like, think about what if we stopped that? How many people would die?
Fair amount.
A lot. And this is where, like, I get on my soapbox with investments. Like, when you're buying the companies, this is why we look for what we do. Think about these things. Think about the macroeconomics. Think about what you're buying and why you're buying it. That's why we buy nuclear Holocaust companies. No, I'm kidding.
So what I get out of that is the guy who says, don't bet against American ingenuity is the same guy who goes out and buys German automobiles and bets against American ingenuity.
What do you drive? Chinese car.
That's not a Ford. Who drives the Ford?
Well, it's like the Chevy came out with the Nova. In Spanish, that means no go.
But it did. It went like a bat out of hell.
Can you imagine that, trying to sell that to, like, let's say you didn't know how to speak Spanish, and you go down to Mexico, it's like, hey, we got a new product, you're gonna love it. It's called Nova, and the guys are looking at you like, what did he just say?
Supernova.
Yeah. Hey Matt, we have
now they're talking
boxes.
about your chair.
Yeah, they're talking about my chair. My chair is sponsored by Pfizer. Actually, no, nobody sponsors this channel. That's why I cry halfway through the stream, every stream.
Nobody gives us money.
Nobody cares. Let's see. They buy. So, man, you guys are really like ragging on me. That's kind of funny. Anything on YouTube from Spartacus?
Not since he bought the line. Bought the line.
Yeah, yeah.
They need to store the products that are in the supermarkets.
It's hard to do that because you got to pay for all the refrigerants and stuff for that. Here is Doroni.
That looks like a little toy.
Doesn't it? It's like life's like you can sit in that, but it does.
Yeah,
it's like a little thing. I got a car.
Looks like a little drone that you could,
like you could grab the black part of it, and that's like your little handle as you fly around
like,
like a little kid.
Somebody could just, it's like a big. Your hand is.
So this is where most people like who actually have money actually buy the real flying car. And,
what the hell kind of picture is? I'm still stuck in this picture. I'm sorry. What they could have done about it, because even the grass around it, because it's like really tall grass, like it makes it look tiny. I think this is a toy. I think this is their toy version of that car that they stuck on the ground.
Could be. Yeah, so we got the CEO of the company running around like look, I made a flying car.
This is
like a kid.
This is our markup for it. This their demonstration. Anyway. Go ahead.
That's funny. So that's the Doroni personal aircraft that they're talking about. This article is not about the Doroni aircraft, which I do want to see them. If it comes down in price, I'm going to buy one. I'm going to show up to my customers and immediately get fired because I think I make too much money. No, I swear Intel paid for this. But no, the high energy density lithium metal battery packs to power 1,850 pound eVol aircraft. So solid state batteries have been I think you're right. I think that is fake. Anyways, the solid state batteries that are coming out now have 30% higher energy density than the ones before.
Are they transformers?
Maybe we're getting close because it's solid state, so maybe it'll glow. But I guess in the automotive industry, I think you're going to see a huge shift soon, which is very expensive to do with tooling and dyeing because the like I worked in the automotive industry for 6 or 7 years, I think. But like they had anytime a vehicle would come out, and especially in this area, they would have a factory line that would produce cars for like GM and Honda and Toyota. Like they'd make interiors for 5 or 6 different brands. But anytime a major shift happened, they'd have to retool the line, and that would take forever. So a lot of the manufacturers have to like go in line with it. So I would not say that the flying aircraft realm is there yet because you got to think about scale and logistics. But the battery technology is getting there. You're starting to see things like the Toyota RAV4 now has a battery pack that'll get you 40 miles without doing the gas. I think you're going to see some hybrid engines coming out now that are going to take advantage of this stuff. And as that energy density gets higher, I think we're not quite there yet. I think what we'll get there is probably 2035. Something like that, where the energy density will be high enough to get over that thrust to get us more than 50 miles before the thing pedals out.
How long before Elon and Tesla buy this company and make it a Tesla?
And probably not that long because they got a ton of money. But like that's if you're looking at, because somebody asked me 2 weeks ago, like, should you buy these like solid state companies or should you buy automotives? Like, well, it really depends on where the technology that's going in these cars goes. Because I think Porsche just came out with a electric Cayenne.
And Ferrari just came out with an electric car.
Yeah, let's take a look at that real quick. So all electric Porsche Cayenne. So this thing is using the current technology. Oh, that's not cheap. It's only 100 and actually, it's
111.
really affordable. It's only $1,700 a month.
That's more than my house payment.
That's funny. But this is like all electric. So think about what you're seeing today in this space with the lithium ion style batteries. And then let's increase the energy density of these cars, 2030, 2032, 2034, 2035. What will happen to the range? Because right now, if you look at Tesla.com and we look at their Model 3 long range, I think it's almost 400 miles.
Well, you always go off on, oh, it's only 260 miles on a charge, and you go down on that. Like, if it's become 600 or 1,000 miles, I'm buying.
If I can circle the globe, I might buy one.
When you look at it, how much range does your BMW have? 350 on a tank?
Yep, about
maybe.
that.
So, I mean, it's almost the same as what your car gets anyway. The only difference is there's ample gas stations around for you to fill up. That's the only difference. So when I look at it, I think if it's got 300 miles, 327 miles, that's what my car gets, right?
The charging time still takes a while.
Well, it doesn't matter. I've charged it at home.
Or
I just park it at home. I plug it in, and by the time I use it again, it's charged.
So the Porsche actually has a 15-minute where you can get like 80% charge time. The solid-state batteries cut that even more. So you're going to see cars that will charge in less than 5 minutes. Now, if you think about I got a V8 Cayenne GTS, so I've got I kill a tree every time I start the car. But like, no, you pull in a gas station, I'm sitting there, I got to fill up an 18-gallon tank. So I'm sitting there for 10 minutes or so filling up the tank. Think about the difference there. If I plug in the same car that's electric with a solid state battery, I have 5 minutes, I'm 80%. That's faster than almost as fast as filling up with gas. So we're getting there. That's basically,
if I go to a gas station in my car, from the time I pull in, get out, do my credit card, fill it up, put it back, get the receipt, go. It's about 5 or 6 minutes for the whole process to do.
I like how they don't tell me the range of this thing.
It's got to be somewhere.
It's like, look how pretty I am.
Go to the summary.
Let's see.
Do you have to download the PDF?
People who buy these cars don't care about that stuff, man. They're just like, ooh, is it cool? Do I get ego? Do I get my ego boosted? Because I need that too. Yeah, they don't tell you. It's funny because like when you go to Toyota's website, they actually show it to you.
Maybe it's in the PDF. Download the PDF.
I want to download the PDF. That's actually
there's a show more. Hit the show more.
No, that's buying the car.
Yeah, it just shows how much.
And that's why I haven't replaced my GTS. $162,000. That's more than my first house. So nope, not right now.
That's a big pile of nope.
Just like most of my jokes, big piles.
Why would I buy that? Like I could buy a supercar for that and have real fun.
Well, it'll outrun most supercars. Most. It sounded like constipation. Brian was like, I don't think so, Tom.
I don't think so, Tim.
I don't think so, Tim.
Maybe like regular sports cars. The supercars are really fast. You're underestimating how fast supercars are.
I don't know. Porsche goes 0 to 60 in like 3 seconds for 6,000 pounds. That's a lot. So this one has, here we go. This is mile per gallon, 47 miles per gallon. And then I think this one goes almost 40 miles in battery alone. So I think what you're going to see with solid state batteries is more of these hybrid vehicles coming out over the next 5 years. And then after that, you're going to start seeing the energy density and the manufacturing capacity get there with companies like Deroni. Because Deroni is super early. And maybe you could be the next billionaire buying something like this. Maybe this could be you. But I want to see the logistics and manufacturing space build before, like, what does they say? Aviation industry. If you want to have a small fortune, invest in the aviation industry and like start with a large fortune. But like in this case, I don't think the battery technology is quite there. It's getting there, but it's not there. When it does, you're going to see it show up in cars like this first. And these are almost there. I think within the next 3 to 4 years, they were saying like these cars, the Toyotas, the Honda, the Hyundais, the Kias, all of those are going to have close to 80 to 100 miles on the battery pack while having still like a 4-cylinder, 6-cylinder, whatever engine in them. And that's impressive. But that's all based on solid state batteries, which charge much faster and don't have the like hazmat teams showing up if you ever get into an accident or something. And the other good thing is solid state batteries are a little bit more resilient in the winter. So there you go.
All right. So the ranges on the Cayenne Electric are 317 miles up to 339 for the long range.
That's pretty good for a heavy car.
They're trying to get to 400.
What's the 0 to 60 on it?
4 seconds.
That's still fast for a big car. That's not quite the Corvette. I like the new Corvettes.
I'm not saying that's not fast, but when the American can do it in 1 second, you know?
But who needs that? Why would you need that? Oh,
when
man.
a Tesla Roadster, the Vaporware Tesla comes out and it's 0.9 seconds, you know? It's
okay. So Brian, tell me the truth.
Corvette can do it in 2 or just under 2 seconds.
Do you like the Corvette or the old school Ford, like the Shelbys? What do you like better? Because this kind of reminds me of a Lamborghini Diablo or something.
Yeah,
like
of the Corvettes, I like this Corvette probably the best. But I also like the old school like 67 Stingray with a split window. Those are pretty fly.
Okay.
The Shelbys, like a GT Shelby, like the Ford GT, that was pretty sweet. I would get one of those as well.
If you ever get in one of these cars, they're super tiny. It's kind of funny.
I fit just fine.
It's like watching a basketball player get out of one of these cars. He's like driving like this.
His head's over the windshield.
Yeah, like it's funny.
6-7 foot tall. He's like, you don't fit.
I was a Boxster guy. I like the Porsche Boxster, but after seeing how they redesigned the Corvettes, I kind of like these now. I like these.
The Porsche GT3 is one of my favorite Porsche. That thing is bad,
isn't it?
But man, I'd take a Stingray.
I can't see myself buying one of these right now because I have an 11-year-old soon.
Well, think of it this way: you're spending like $70,000-$80,000 for a C8 and whatever the C9s, or you could spend $180,000 for a Lamborghini and be just as fast as them and look, arguably just as good in it, you know?
Or you can buy a Cayenne and watch your kids kill themselves when they go through driver's training. I am actually worried about that. Both of my cars are 0 to 60 in like 3-4 seconds. So maybe I should probably buy the Toyota next. Maybe. The sad part is like I've had these cars for years. Like I've had the Porsches before I even started the company.
Well, I don't think you're going to have those cars by the time your kids actually go through driver's training. I think you're going to have new cars. But
so what do I buy then? The Doroni?
Just buy them a junker car to beat up. That's what you do.
I'll buy
don't
have
them drive your car. A tank.
I'll go to Arnold Schwarzenegger because he's got that used tank that he bought from World War II. I'm going to buy one of those and I'll just have them drive that. We'll be safe. I have a tractor. They could drive that.
Get one of the... No, it's not. Unfortunately, it's not road ready for that. But you could get them like one of the old school Hummers. Like the military Hummer with the reinflatable tires and all that. You could get one of those for $14,000-$15,000.
What was that? I think that was a Prius. Daddy, I think I just heard somebody. That's okay. You're doing fine, honey. Oh, that's going to cost me an insurance.
But they'll live.
That probably worries me more than anything else. The fact that like I've got 2 cars that do 190 miles an hour. It's like, you know, I started with a Geo Metro, and I remember my mom that she was really worried that like the thing's a death trap. I didn't realize like what that fear actually was until now that I have my own kids, and now they're getting. I was like, oh, okay, I get it now. But I
Hey,
think,
Razorcore, have a good one, man. If you don't get on your phone and finish it out.
yeah, we're wrapping up anyways. I got work to do for my other job that's gonna make me work all day tomorrow and probably half the day Sunday. And I got to cross reference the budget for 4 different counties and like compare the IT operational spending for all of them, and then like put in the county that we work at in there and make sure that we're cheaper. We know we're cheaper, but I have to actually show it in a way that makes sense to somebody who doesn't want to dig deeper and be able to look at it in 10 seconds and actually understand what they're looking at. So it's a lot of work. And I have to do it because Dividend Dudes does not pay us yet.
We still have to work.
We still have a job. I think next week we should probably take a look at some stocks for good value mismatches. So what I want to do, and if you're tuning in, I saw a bunch of people jumped on. If you got questions about stocks, please ask them in the channel. We'll try to answer what we can. But what I want to do is I want to try to find some stocks for this month 51, that have a good value mismatch. So what that basically means is the building's on fire. Everybody's running out of the building. We want to say, oh, the bones are good, and run into the building. We're looking for a business that's a good value in their products and what they have relative to what the narrative is about the company. So we can do that by doing stock screeners. I want to kind of randomize it this month, and not in particular because I want to see what we might be missing. Because if I just keep sticking to my little niche, I might not get the same story. So bring me all the companies you can. Bring Brian all the companies you can, and we'll take a look at what we can find. But we got 3 weeks.
Place in Kajabi to put all of your stock questions. So if you sign up for Kajabi, and we'll have to put the link in the description, just put them in the ask about the stock section, and we'll get to them.
I want to see if this is enough for a Honda Civic before we go, though. $382 a month. All right, so Honda Civic lease.
I think the Civic lease is up a little bit.
Is it?
I think it's 400. It's close.
Maybe that's
425.
Fox Honda. No. We want the actual like Honda. There we go. Oh, fine.
It's going to find you a dealership near you.
Oh, there's our zip code. All right, so what do we got? The Honda Accord. Oh, we actually can lease a Honda. Really? Cool. We can buy what kind of Honda do you want, Brian? I'll buy a Honda. It'll be a company car. It'll be great.
We can get the hatchback. That's the hybrid. The hybrid will be a little bit more.
So what we've built over the course of 4 years is enough to lease a car.
Do the Civic sedan.
Where?
The red one.
That one? Oh, because it's red? That's a cop magnet, man. They're going to look at that car and get pulled over, even if you're doing exactly the speed limit.
See, now it's not. It's gray now, or black. So do the middle one. See all offers. Yeah.
Okay.
It turned red again.
2 offers.
$229 a month.
Wow. I would never do this, but wow. Okay. So what we've built in our portfolio, starting with 0, with the average household income, disposable income left over, is enough to lease and probably pay for some of the fuel. Maybe probably lease and get the insurance for a Honda Civic.
Well, we're almost to a point, I think, then where we can make payments. Like if we just bought it and made payments.
Can I finance it?
Yeah.
So, boy, those are actually not that bad of rates for a
we're
car.
not doing that.
Interesting. So we're getting there. So take this out over 20 years, and you can hopefully benefit from this, make some money, learn from us. Come next week, bring the questions. Troll me all you want. Troll Brian all you want. We'll try to answer what we can. There's our proof. Yes, we make the money. That's excluding dividends. Here's what we make in profit. So of the portfolio, 1/3 of that is pure profit.
We do all the things.
We do all the things. I'm terrified.
Again, not hard things. It's just time-consuming things.
I'm terrified of the fact that we've done so well, because that means if I make a mistake, everybody will laugh at me. But we're going to make this mistake on the channel, and you'll see it, and hopefully you'll learn something from it.
I knew you didn't know what you're doing.
I'm looking forward to it. Yeah, that's great, because social media is such a forgiving place.
And you'll cry in your Frosted Flakes.
Probably. I don't eat Frosted Flakes.
Cry in your Cheerios.
Cheerios, yeah.
They don't like me. They think I'm stupid.
Again. And
I'll show
again.
them.
The need for validation not met. All right. Well, I guess subscribe to your email a couple of weeks ago. Yeah, Matt, that's because we're not doing it full time and Brian's lazy. You got to send out your emails, Brian. We're going to have Rob do it.
Do we have, there's a spot to subscribe to emails? Like a newsletter?
Oh, man.
I got to look at that because there's some, it's like not completely done. So if you subscribe to like the email thing, there's nothing at the moment configured for that. So I need to configure that. I'll get to it.
Matt, you're going to get an email that says hello world. And that's the whole email. There's your
It's probably going to be like from the template I used. It'll be some other dude.
If you're looking for something like that, I would use our discount on Seeking Alpha. And then like there's people that do that religiously.
Yeah, eventually we'll have time enough to like create a newsletter type deal. But for now, we're still got to do IT work. And that cuts into our Dividend Dudes newsletters.
Yes, it does. All right, that's next week. So hopefully I'll have a lot more investment articles to look at next week other than the Procter & Gamble one. But I figured people wanted to see the Thinkorswim thing. So if you're tuning in, you're looking at that. We actually looked at Thinkorswim to show you level 2 and the tape and all the limits and puts and stuff on the stocks. So we talked about volume too. And you could, when watching that thing real time, it's surreal to watch. You go back and look. It's pretty cool. So I think we need to rate somebody.
Yes.
We need to do that. Okay, let me go do that. Rumble Studio, rumble.com.
It's because it says we have to.
Yeah, Rumble makes us do this. Ooh, this is huge. Who is this? This is Matt Morse TV.
Oh,
do
Matt
we want
Morse.
to rumble them? Do you know him?
Let's rumble him.
I have no idea who this guy is.
I don't know him. I don't know any of these people. I've heard of him.
Brian's like the most popular guy in the room. Here we go. Something shocking just happened.
This is huge.
If this is clickbait and you guys see this and you don't like it, please tell me. I'm sorry. I hate the fact that social media is like that, but
Matt Morse he's got, of course, it's Rumble. He's a right-leaning. He talks about politics and stuff.
Is Roseanne on again? I don't know. Is she? We might be a little bit late for that today.
You'd have to view all. Maha News.
Maha News. Hey, there's this finance guy. Like that might be a good one to watch them. So desperate. No, we'll do that one. That one's good. All right, guys. If you have questions, bring them next week. With that,
we need the link.
Yeah.
Copy the link.
It's copied. Last chance. This is huge.
Bye, guys.
Bye, guys. I'll see you next week. Happy investing. Oh, I don't think it did it.
Yeah, it did. Didn't it?
I don't think it did.
Did you do it in? You did it in studio. There it is. Wait, slash raid.
Try it again. I didn't do it. We're not going yet.
Did you do the space?
I did. Oh, they don't want us to rate him. Maybe he's too fringe.
Is it the wrong link?
I don't know. Let's try it this way. We're going to fail the Rumble requirement.
Enter.
Try it again.
Slash raid. Space.
Press the button. No, it didn't. It failed. Brian, can you do it?
Yeah, hang on.
We fail. We're technology guys that don't know how to use technology. Hey, check out that thumbnail. It's almost like AI made that. I mean, no, we did it. It was great.
Oh, I don't think he's...
Is he not live?
I don't think he's live anymore.
Oh,
maybe he is. Matt Morse TV. Yeah. I don't...
Let's find a teeny bopper techno thing that I'm sure they'll like that.
Roseanne Barr's
Warzone.
live still.
Is she? Where
Yeah.
is she?
Hit view all.
View all. Where is it?
The first one.
Oh, crying out loud. Okay, fine. Roseanne Barr. I don't know what she talks about. Hopefully she's entertaining.
She's a little nuts. But she is entertaining.
That didn't work. What's going on with my browser,
There you go.
man?
Did it?
No, I didn't do it.
Okay, let me do it.
No, they want us to keep streaming. This is they call this the you will work for us. Yes, sir. May I have another one, sir?
Okay, I'll do it. Hang on.
All right, Brian's
I'm
gonna
doing
fix
it.
me.
I'm doing it.
Will it work? We're not gonna be able to do it this week. It's gonna fail. Is it working?
I did it. Yeah,
It worked?
I did.
Okay. It worked. Bye.
Bye.